Stimulus optimism fades as Mitch McConnell blocks the Democrats' attempts to quickly approve $2,000 checks. But with days until the Georgia vote, well, the pressure mounts on the Republicans to deliver more. The UK approves the AstraZeneca-Oxford vaccine, with India set to follow. This as the first reported case of the new UK virus variant is found in Colorado. And the EU and China are expected to confirm their much-anticipated investment treaty today in a move that risks upsetting the incoming Biden administration. Good morning, everybody. This is Bloomberg Surveillance. I'm Guy Johnson in London, in for Francine Lacroix and Tom Keane. Both have a well-deserved day off. Let's catch up with the Bloomberg First Word News. Here with the details there, Radhika Gupta.
Thanks, Guy. Senate Majority Leader Mitch McConnell is rebuffing both Democrats and President Trump on bigger relief checks. He's blocked an attempt to force quick action that would increase direct stimulus payments to $2,000. The president warned that failing to act now amounted to a death wish by Republicans. A new variant of coronavirus that emerged in the UK has now been found in the US. That's raising concern that a more transmissible strain could spread widely across the country. A man in his 20s from Colorado is the first American known to be infected with the mutated form of the virus. He has no recent travel history. In Germany, the daily death toll has surpassed 1,000 for the first time since the pandemic started. There were more than 1,100 deaths there in the 24 hours through this morning. Germany joined its European Union partners in starting vaccinations on Sunday. And British Prime Minister Boris Johnson plans to rush his Brexit trade deal through Parliament today. He's confident that it will be easily approved. A prominent group of hardliners in Johnson's Conservative Party plans to back the accord. The main opposition Labour Party will also vote in favour, even though it calls the agreement inadequate. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Radhika Gupta. This is Bloomberg, Guy.
Radhika, thank you very much indeed. Let's check the market, show you where we are. Light volume, a feature on both sides of the Atlantic as we head into New Year. Nevertheless, European equities are bid but going sideways. Travel and leisure, probably the best performing sector this morning. S&P futures pointing to, let's call it a 0.5% gain at the get-go of trade a little bit later on Wall Street. Again, light volume going to feature there. The dollar is down 122.80. In terms of the Bloomberg Dollar Index, it's extending its drop now to the lowest level since April 2018. Bitcoin, though, remains bid. We were up at 28,572 a little bit earlier on in the session. That's a fresh record high. Let's get you caught up on some more news. Senate Majority Leader Mitch McConnell has blocked an attempt by Democrats to increase direct stimulus payments to Americans to $2,000. President Donald Trump warning that the move amounted to a, quote, death wish by Republicans. He's referring to Georgia, really. Let's talk more about this story now with Kevin Cirilli, Bloomberg's chief Washington correspondent. Kevin, good morning. How much pressure is Mitch McConnell now under to increase those payments to something above 600? Is there a compromise somewhere between 2,000 and 600 that is going to ultimately have to be delivered upon here?
Good morning, Guy. I think what you're seeing is President Trump significantly staying and trying to suggest that should Republicans lose the Georgia runoff seat, that it would be Senate Majority Leader Mitch McConnell's fault. Meanwhile, Leader McConnell suggesting that President Trump had negotiated just way too little, too late. As it relates to whether or not there is still a path forward on the $2,000 stimulus checks, based on interviews that I conducted yesterday, I can tell you that there appears to be a very small but quickly closing window if they would like to get this through by Sunday. But again, remember that a new Congress is set to be sworn in next week. And so because of that, the window is rapidly closing.
Kevin, the two candidates on the Republican side in Georgia have both backed the president. How much does that tell us about where this story is going? The president has backed it. Those two Republicans have backed it. Everybody's watching Georgia. Mitch McConnell, in terms of the concerns that he will face at this point, is there a direct line that I can draw between these checks and the Republicans' likely performance in that Georgia runoff?
Democrats are increasingly optimistic about their chances in the Georgia runoff election. This is a state that President-elect Joe Biden carried for the first time since 1992. a Democrat has carried that state, the last time being former President Bill Clinton. And they're really ambitious in terms of their get out the vote effort. They're an early voting. They are hoping to be boosted by black turnout in Georgia and to again run a much more broader campaign, a referendum campaign, continuing from the Biden-Trump election just a few months ago. In contrast to that, Republicans are running as a joint ticket of sorts. And Senators David Perdue and Kelly Loeffler are saying that they are the chance to serve as a check and a balance to Democratic progressives in the House as well as in the executive branch. So it's really been a remarkable anomaly of sorts of an election, one that has drawn in tens of millions of dollars from across the country for both sides. It's incredibly expensive. And so as a result of that, it's, as one prominent Republican strategist put it to me yesterday, it remains a toss-up, but it has Republicans a bit uneasy that it remains a toss-up because typically this would have once been thought to be a Republican stronghold state.
Kevin, thank you very much indeed for the update. Kevin Cirilli, Bloomberg's chief Washington correspondent, joining us ahead of that Georgia runoff, which becomes increasingly tense and certainly a huge factor for market participants. Meanwhile, the US is vaccinating only an average of 200,000 people a day. That is far short of the goal of 20 million vaccinations by year end. In the UK, the use of the AstraZeneca Oxford University vaccine has now been given the green light, marking the first national approval of that vaccine. Joining us now, Sam Frazeli from Bloomberg Intelligence to give us his take on both of those stories. Sam, first up, can you explain to me what is happening in the UK? Because I am really kind of mystified by the news on the regime that is going to be used for the distribution of this AstraZeneca vaccine come Monday. Basically, it seems that the idea is that we're going to give everybody a shot and then worry about the second shot kind of further down the road. Can you explain that to me?
Yeah, I think, and good morning, Guy. I think the point to be careful with is that when they presented their data in the Lancet paper published on December 8th, there was a comment about the time interval at which people in the UK trial who got their standard dose of the vaccine on both injections had actually a time interval of 69 days median. So that's about, there was a range of 50 to 86 days. So this 12-week comment with the second dose being administered up to 12 weeks after the first dose, I think is based on that point. And in the UK trial, which had that time median between the two doses, we had a 60% efficacy for the vaccine. So that's where I suspect this 12-week comes from, which was all happened because of another mistake within the trial, basically.
Sam, Vice President-elect Joe Biden in the United States is complaining that the US is not distributing its shots fast enough, 200,000 a day, well short of expectations. Is that basically because of the limitations of distributing messenger RNA vaccines, which have to be kept super cold, particularly the Pfizer one? And how big an impact would a vaccine like the Astra one therefore have on that number?
Yeah, so I'm sure that the so-called cold chain requirements for the two vaccines are not helping, but the companies have done the absolute best they can in making sure that the vaccines can get to people as and when needed. But the problem is that the support, the financial support for vaccinations across states is, from what I understand, woefully lacking. So I read somewhere, and please, I'm hoping this is correct, that the states were getting something like $6 million to help put the infrastructure for delivering vaccines. I mean, that's nothing. If you look at the story in France, for example, you're going to have to see a doctor before you get the first vaccine, so that's 2 visits, and then see the doctor before you get the second vaccine, that's another 2 visits. Well, these cost money, and the infrastructure needs money, basically.
And I guess the whole process gets slowed down as a result of that. Sam, thank you very much indeed. Greatly appreciated. Sam Fazeli of Bloomberg Intelligence updating us on the latest on the vaccine. Out of interest, at 6:30 a.m. Eastern, we're going to be talking to the Lancet editor. Sam mentioning the Lancet there, the publication. Let's turn to another piece of news we're watching. The EU and the Chinese leaders are set to approve a hard fought-over investment deal a little later today, paving the way for European companies and more foreign opportunities to exist in China for them and vice versa. Joining us now from Brussels is Bloomberg's Maria Tadeo. Maria, can you just give us the sort of the broad brush details of what this deal actually is and what it encompasses?
Right, guys. So this is what we know. In about 50 minutes' time, the heads of the European institutions, Angela Merkel, will be on that call. Remember, the Germans are holding their rotating presidency of the European Union, and President Xi of China are jumping on a video conference that will see this investment plan come to fruition and be announced. Now, in terms of the actual content, there's two things that Europeans have been briefing today that are key. One is that China will make a pledge to be more transparent when it comes to state subsidies. That has been a huge issue for the Europeans who worry about state money being plumped into Chinese companies that then could engage in predatory behavior in China. And the Chinese government will also say that it is looking to open up some of its markets to European companies and European capitals. And this was something that was key for the EU. The big question is, and this will be interesting, is what areas are the Chinese not conceding? And also the follow-up question to this is, how is Europe going to enforce this? Because we know that dealing with China can be problematic on a number of fronts. When you look at technology, when you look at the impact that the state still has, and also just the idea that, how are you going to deal with this if the targets are not met or complied with? What the Europeans say, however, is that this is the first step to recalibrate the relationship and the trade deficit that is now working in favor of China in detriment to the European Union.
Maria, how much concern is there in Brussels about this deal antagonizing the incoming Biden administration?
Look, the timing is funny to some extent because this is happening as Joe Biden is entering the White House. He's not really going to change his policy on China. We all know that the United States has changed course on that. And the Europeans, to some extent, have welcomed that. But they also say, and this is something that is repeated time after time, that they have to push for what they call strategic autonomy. And that means not depending on anyone. It means drawing your own political agenda. And they repeat that this is time for real politics when it comes to the EU and China. This is a huge market, potentially also a huge opportunity for the European Union, and they want to invest in it. But also they say that this is not so much about a tight relationship with China, but more about recalibration, becoming a two-way street. So this is not being close to Beijing or President Xi. This is about a fair deal for European companies. At least that's the spin that Brussels is putting forward this morning.
Maria, thank you very much indeed. We'll look for news on that deal a little bit later on. Maria Tadeo joining us from Brussels. What have we got coming up for you next? Sarah House, Wells Fargo Securities senior economist, is going to be joining us to discuss these markets. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Minutes past the hour. Welcome back. This is Bloomberg Surveillance. I'm Guy Johnson in London. Francine and Tom both have the day off. Economists at Wells Fargo see a tenuous start to 2021, followed by big growth in the second half of the year. They say the latest relief bill should fuel real GDP growth of around 7%. So let's dig into the details of all of this. Sarah House, Wells Fargo Securities senior economist, joining us to discuss it. Sarah, good morning. Thanks for your time today. Let's start off with kind of what is happening right now and the impact that this is going to have in terms of what the economy is going to look like in 2021. Joe Biden says that we are basically vaccinating too slowly. There is this kind of belief in the market that vaccines ultimately are going to lead to a significantly better second half for the US economy. But if the process is too slow, does that get called into question?
So I think the vaccine is a big part of our story in terms of growth is starting off the year in a really weak position, but we do expect activity to ramp up in large part because of the vaccine. So any delay that we have, like has been reported, will push back the timing of when growth really takes off. But I think you should see activity begin to pick up late spring, early summer, even if that vaccine doesn't roll out quite as quickly as planned, just as you do have consumers with a lot of COVID fatigue. I think once the spring weather comes, you'll be seeing them get back out there. You can see some activities resume a little bit more, even with social distancing, things like outdoor dining. And so I think that maybe delays the exact timing of the takeoff, but I still think you're looking at a very different story in the second half of 2021 than what we're looking at over the first few months of the new year.
Okay, the other great imponderable to my mind at the moment is what is going to happen in Georgia, because it's still unclear as to which way the Senate ultimately will move. Were the Democrats to win, I think we could see really huge amounts of stimulus flooding over the US economy. How big a factor is this going to be, and sort of how bifurcated is the decision tree in terms of the impact one way or t'other in terms of your economic projections?
Well, I think even if you were to see the Democrats win the runoff elections in Georgia and take the Senate, the majority there is going to be razor thin. And so I think that's going to make any sort of sweeping legislation very difficult, even additional major COVID relief. And so I think, on the margin that should help in terms of maybe squeaking out some smaller deals. But by and large, I think you're still looking at what's more or less going to be a divided government where, again, even if the Democrats do squeak out that majority is coming due to the fact that they won what are otherwise very moderate states. And so we saw, for example, in 2017, it doesn't take much for just one or two moderates to sink major legislation like the repeal of the Affordable Care Act and go against their party lines. And so I think you're still going to be looking at a year when major legislation is going to be tough.
Even in the near term, though, there is pressure on Mitch McConnell to increase the stimulus checks from $600 to $2,000. How inflationary would $2,000 checks be, do you think?
The runoff. So I think that would certainly support the risk of significantly higher inflation in the second half of the year. But I think overall, what we're expecting is that inflation is still going to struggle to hit 2%. So yes, you're going to get a pop around the second quarter of this year as you have some very easy base comparisons. But you have to remember that a lot of the growth this year is going to be fueled by services. So we've pulled forward a lot of demand for goods. That's been one area of inflation that's actually picked up. So goods inflation is actually the strongest we've seen since about 2012 this year. And so so even as you see a lot of strong spending in services, that more tepid demand for goods is going to be a cross current in that overall inflation picture. And you have to think about the underlying dynamics of inflation. Have they really changed? So yes, we've seen inflation expectations drift up, but they're still well within the range of the last decade. And so I think whether we see more than just a one-time pop in inflation, but whether we see an actual sustained and repeated price increases remains a big question.
And what would that mean for the Fed, Sarah? Because at the moment, I look at US break-evens, and they're kind of circa 2%, and I look at the US 10-year, and it's circa 1%. So basically what that is telling me is the market sees some inflation, but really doesn't expect the Fed to react to it. Is that the correct assumption?
So we expect that the Fed will continue its asset purchases through the course of 2021. So no move in terms of the Fed fund rates anytime near on the horizon. But if you do see inflation start to creep higher and those expectations begin to rise, I think you could see markets begin to price in a rate hike maybe sooner than expected, which could lead to some tightening in financial conditions. And so I think it really comes down to how well the Fed communicates its new reaction function. So what they mean by inflation just moderately above 2%, just given how weak inflation has been over the past decade. So it'll all come down to that communication factor and whether the Fed can keep financial conditions accommodative even without actually adjusting their policy stance in terms of asset purchases or the Fed funds rate.
Sarah, great to speak with you this morning. Thank you very much indeed for sharing some of your time with us. Sarah House, Wells Fargo Securities Senior Economist. Thank you very much indeed. We'll carry on with the conversation with the firm. Eric Nelson, Wells Fargo Macro Strategist, is going to be joining us 7:30 a.m. in New York, 12:30 p.m. in London. This is Bloomberg.
Se logra una sonrisa de parte de cada persona que utiliza el dispositivo, ya que se pone en situación, entre comillas, de una persona discapacitada. Y ven que lo sorteamos de una forma agradable, porque el simple hecho de sentarse en un dispositivo ya es agradable.
Nace MAT como una solución de movilidad a personas con discapacidad, nace Mandados como una opción de generación de ingresos y nace MAT Tools como generación de ingresos y educación a las demás personas que no están en silla.
Bloomberg Surveillance. I'm Guy Johnson in London. Francine Lacroix, Tom Keane, both having a well-deserved day off today. Let's talk about where these markets are. Light volume on both sides of the Atlantic, certainly a feature for equity markets. Equity markets, though, are bid. We are expecting US markets to open up by around 0.5% when Wall Street gets going a little bit later on. That's fading a little bit. The Stoxx 600 up by 0.2% at the moment. Banks, travel and leisure, technology, the lead performing sectors that we're watching here in Europe today. Utilities underperforming. So a slight risk-on kind of sector distribution in terms of the stock story. We are, though, seeing the dollar continue to move lower, 122.67. I think on the Bloomberg Dollar Index, we were back down to levels kind of mid-2018, a little bit earlier on. But Bitcoin remains bid. We were up much more earlier on. We faded the move a little bit. The record high hit earlier in the session, 28,572. The firm focus is on what is happening, though, with the vaccine and the virus story today. We'll talk more about that a little bit later on. Lauren Sauer, Johns Hopkins Associate Professor of Emergency Medicine, is going to be joining us to give us assessment of what is happening, both in terms of the ICU story and in terms of the rollout of the vaccine on both sides of the Atlantic. Looking forward to that conversation. This is Bloomberg.
Chinese brands now account for 7 of the country's top 10 cosmetics lines, up from just 3 in 2017. That has pushed out foreign brands like L'Oreal's Maybelline, which has seen its share of China's makeup market plunge by half since 2010. For more, we're joined by Bloomberg editor Bruce Einhorn. Bruce, why the drop?
Chinese brands are becoming much more adept at reaching Chinese consumers, especially now at a time when more consumers are reluctant to go shopping outside. People are spending more time at home. People are spending more time on social media. Chinese brands are very good at using social media, using live streaming, using other things in order to market. Chinese brands also tend to be less expensive. And so at a time when the economy is struggling a bit, there's a lot of uncertainty, people are more budget conscious, Chinese brands have a bit more of an advantage.
Explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
This is Bloomberg Surveillance. I'm Rishika Gupta with the Bloomberg First Word News. Senate Majority Leader Mitch McConnell has made it unlikely that there will be a quick action on an increase in direct stimulus payments. McConnell says the Senate will consider boosting payments to $2,000, but that will only take place in conjunction with other demands from President Trump, such as re-examining special protections for tech companies. The US is vaccinating an average of only 200,000 people a day against the coronavirus. Data show that while Operation Warp Speed has distributed millions of doses, some states have been slow to get them into people's arms. According to a Bloomberg News analysis, the US almost certainly won't hit the Trump administration's goal of 20 million vaccinations by year-end. A Republican congressman-elect from Louisiana has died from coronavirus. Luke Letlow was elected in November. He was 41 years old. Letlow was hospitalized with the disease on December 19th. In North Korea, Kim Jong-un is expected to look for new ways to drive growth in the wake of sanctions and the pandemic. It's estimated that the country's GDP shrank 8.5% this year. That would leave Kim with a small economy than the one he took over 9 years ago. North Korea's ruling Communist Party meets next month. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg, Guy.
Ritika, thank you very much indeed. So the UK has authorised the use of the AstraZeneca Oxford University vaccine, marking the first national approval for the vaccine. Vaccinations will begin in the new year. Monday, I think, is probably the first time we will see it. The editor-in-chief of the Lancet Medical Journal, Richard Horton, joins us now to discuss this. Richard, good morning. Thank you for your time this morning. Let's talk a little bit about what is happening with the distribution of this vaccine and the regime that we are going to use here in the UK. The authorities seem to be putting a firm focus on trying to get as many people vaccinated with the first shot and then always worrying about the second shot further down the road. Can you explain the logic behind this?
Yes, good morning. I think it's important to understand the rationale for having two doses. The first dose of the vaccine is called the priming dose, and the purpose of that priming dose is to kickstart the immune system into action. It's really the most important dose of all of the two because it is activating both the antibody response and what we call the T-cell response, which really over the next 2 to 4 weeks achieves its maximal target. The second dose that follows a month or so later is called the boosting dose. And that boosting dose really is there to stabilize the initial response and to keep it active over the medium to long term. So what the regulator has done is to look at the data and see that the priming dose of the Oxford vaccine is sufficient to give protective immunity to an individual in advance of getting the second dose. And so we can focus on getting the maximum number of people vaccinated with that priming dose, and that should give us the opportunity to really accelerate, which we need to do, really accelerate the immunizations schedule.
You talk about the fact that we really need to do it in terms of accelerating the rate at which we're getting this into people's arm. Can you just give me an idea of the kind of quantum we're talking about? How big an impact this is going to have? This is a vaccine that can be stored basically in a fridge. It's relatively cheap to produce. How big a step change are we talking about?
Well, let me try and quantify it in terms of the population that we have to cover, because this is an unprecedented number of people. So 90% of deaths from COVID-19 are occurring in people over the age of 60 years. So the target population to protect against premature death is that group over 60 years. Now, in the United Kingdom, that's about 16 million people. So over the next 3 months, to get through to Easter, we need to vaccinate 16 million people. Now, that is more than 1 million people a week. We've never, ever implemented a vaccination program at that kind of scale. The Oxford vaccine, I mean, the BioNTech vaccine, the Moderna vaccines are excellent vaccines. They have 90% efficacy. But the advantage of the Oxford vaccine, as you pointed out, is that you can have much more flexible distribution and implementation arrangements. You can get it into communities that are far more remote and difficult to access than the other vaccines. So the Oxford vaccine gives us the chance to really accelerate the implementation of vaccination, which is so desperately important. We have this new variant. We're coming into the winter months. January and February are going to be really, really tough. There's going to be pressure on our health services. We're going to be ramping up restrictions and mandates on communities. We need this vaccine to be rolled out as fast as possible. We need a step change.
In terms of where the other bottlenecks will be, as you and I have discussed, you can put this in the fridge in your local GP surgery, but you still need to have people to be able to deliver that. How big a problem is it in terms of managing, on one hand, the virus, and as we're going to hear later on today, it looks like more of the United Kingdom is going to end up in the higher level tier 4, at the same time as having the number of staff to be able to manage distributing the vaccine. Is it a zero-sum game?
No, you're absolutely right. The challenge now is not about medicine, it is about management. It's all about implementation.
I'm placing an order to buy euro. The price I'm looking 122.68. Okay, 122.68. I'm looking to buy euro.
Community centres. We can't rely on the health system alone if we're really going to reach this crucial 16 million people in the UK over the next 3 months or so. So it is going to require a different means to mobilise all of our communities. And I haven't seen that yet, but we need to see that early in the new year if we're going to protect ourselves during the crucial winter months.
Be interested to see what the role the military plays in all of this as well. Richard, we'll leave it there. Thank you very much indeed for the input this morning. Very useful. The Lancet's editor-in-chief, Richard Horton. What are we going to talk about next? Well, we're going to be speaking to Katrina Dudley, Franklin Mutual Series Portfolio Manager. Looking forward to that. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered. This is Bloomberg Surveillance. I'm Rishka Gupta with the Bloomberg Business Flash. Bitcoin just set another record high. The world's largest cryptocurrency surged above 28,000 today. It's risen more than 47% this month and has almost quadrupled in 2020. That hasn't stopped critics who question Bitcoin's validity as an asset class. They're skeptical of its speculative nature and boom and bust cycles. Shares of Apple stumbled, but the company still has the lead over Amazon as this year's best performer amongst large tech stocks. Apple's now up 84% for the year after rising 13% this month. Wall Street analysts are projecting that a recovering economy will mean more demand for iPhones, services, and wearables such as AirPods. And Jack Ma's net worth has fallen by almost $11 billion since the end of October. That's when China began stepping up scrutiny of his empire and the country's other tech giants. A few months ago, the co-founder of Alibaba was worth $61.7 billion and was poised to regain the title of Asia's richest person. Now, according to the Bloomberg Billionaires Index, Ma's fortune has fallen to below $51 billion. And that's the Bloomberg Business Flash, Guy.
Veronica, thank you very much indeed. Let's talk about what is happening with the European economy and what it means for assets. Katrina Dudley, Franklin Mutual Series Portfolio Manager, research analyst, joining us now to discuss this. Good morning, Katrina. You are expecting a V-shaped recovery in Europe next year, but unlike the United States, you don't think that's priced into markets. How big an upside are we talking?
I think if we look at it, it's a comparison basis because, 2020 was really tough in Europe. EPS expectations in Europe are down for 2020 about 33%. So the V-shaped recovery really refers to an economic recovery and also for Europe, a recovery in earnings. And we think that's what's going to drive the stock market value in Europe. There's been a real, disparity in the performance of the two markets. We look at Europe, generally speaking, it's down a few percent for the year. That compares with US indices. You've got the S&P, which is up double digits, and the NASDAQ, which is up over 40% for the year. So we think that the hurdle for European equities is actually very low, which is why we're optimistic about their performance in 2021.
Can European equities still outperform US equities, even if the European economy and its recovery underperforms what we see in the United States?
I think what we need to do is separate economic performance from stock market performance. If you have a look, 2020 is a great poster child for that. It's been obviously a very volatile year, but who would have thought in March, when we're in the depths of the downturn and the concerns around COVID, that you would have markets in the US up so much despite GDP being down for the year? So, you could have an economic recovery and not necessarily a stock market recovery. It all comes down to what people are expecting. In Europe, if you take that analogy over there, I think that the expectations for Europe are still very low. People are focused on a lot of the negatives that have happened. They're also looking at a market that doesn't have the COVID beneficiaries that the US has, and also has a number of stocks in their markets which have been disproportionately impacted by COVID. So we think that the expectations in the market are very low, which means that we could even slightly underperform our expectations for GDP growth, but still have a positive stock market reaction.
Katrina, one area that Europe might outperform on is in its relations with China. The Chinese economy has bounced back very strongly. German industrials in particular have significant exposure there. We are going to see a little later on today the EU and the Chinese signing an investment pact. How big an impact do you think that could have?
When we think about the impact of China on European markets, Germany is the one you mentioned. Let's take a look back in January of last year and what happened to a very large industrial company, Siemens. Everyone was concerned about their exposure to China directly, and so the stock started to sell off well before many other industrials sold off throughout the world. And that sell-off was related to, as I said, their exposure directly to China and also their exposure to the Mittelstand. And many of of those Mittelstand companies sell their products into China. So what we saw is a downturn in the Siemens equity. Now, if we fast forward, we look at the setup going into 2021. China has really rebounded out of COVID and has really controlled having a second wave, unlike other economies. So that's a positive. We also have that benefiting the companies that serve China. And then finally, as you mentioned, any lessening of trade tensions between China and any company in the world or country in the world, from Germany to the US, we just think it's beneficial for economic activity globally.
Katrina, when people talk about Europe in a positive light, they often refer to the next generation fund that was delivered by EU leaders, the ability now maybe to borrow on a pan-European basis, and they see this as being a significant step change, a Hamiltonian moment, some people even refer to it as. How is that being overdone? Because my understanding of Italy, for instance, its ability to absorb European funds, very, very patchy. It doesn't have the bureaucracy to be able to deliver these funds in an effective way. And there are some that question just simply the size of that package as well, whether or not it is enough. Do you think we are overestimating the impact that this next generation fund will have?
I think what we've overestimated is how quickly it can be deployed. So we're not expecting any benefit from this to come through into the real economy towards the end of 2021 and going into 2022. So it's the speed of that which you talked about. Italy is one economy which is obviously going to benefit from this because they're being a beneficiary of just the direct grants. So rather than loans, they'll be granted money, which is forgiven. The other country that I really like to point out to people, which really shows you how you've had a seed change in economies in Europe, is Greece. Greece is actually now being classified as a developing market, but it's got a new prime minister in place, and he's been very specific about how he wants to deploy this capital. In the past, you may have seen, funds such as this going in directly into the pockets of the voters, effectively buying those votes. But this time, they've looked at the Greek infrastructure, they've looked at the buildings, which obviously are old given its history, and they are very, very focused on deploying this money into green initiatives and into greening their investments. So I do think it will be deployed into very productive uses. And I think that that is positive, not just for economic activity, but for sentiment towards Europe in terms of that they are now good stewards of this capital.
I hope they're not going to be upgrading the Parthenon or the Eric Theon or something like that, but I appreciate your point. Katrina, thank you very much indeed. Katrina Dudley, Franklin Mutual Series Portfolio Manager and Research Analyst. We greatly appreciate it. Up next, we're going to be back to the medical story. Lawrence Sauer, Johns Hopkins Associate Professor of Emergency Medicine, is going to be joining us. This is Bloomberg.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The Trump administration's plan to distribute vaccines is falling behind, far behind. With only a few days left in December, we've only vaccinated a few million so far. And the pace of the vaccination program is moving now, if it continues to move as it is now, it's going to take years, not months, to vaccinate the American people.
President-elect Joe Biden speaking about the pace of vaccinations in the United States, the US averaging only around 200,000 people a day. Joining us now, Lauren Sauer, Johns Hopkins Associate Professor of Emergency Medicine. Good morning. What needs to happen to pick up the pace of vaccinations in the United States?
I think one of our biggest challenges right now is communication. So in that last step where the vaccine shows up at the healthcare systems or at the states, we need to have a good sense of what's coming and when. And so we are, healthcare systems and state health departments are used to distributing and providing vaccine, but the pace of this and the unknowns of this and the cold chain storage issues around this vaccine, particularly the Pfizer one right now, are larger and more challenging than anything we've ever dealt with before. So we have to make sure that every step of the way there's communication. What number of vaccines are coming? How long will you have to distribute them? What is the cold chain storage process for each element of the vaccine? And making sure that the people on the end, that last mile, the people who are being charged with delivering those vaccines understand exactly what they're going to get and the timeline in which they're going to get them, because that is critical to making sure that they have the staff to distribute them, the space to distribute them, and all the additional resources that come with distribution.
Lauren, the UK has this morning approved the AstraZeneca Oxford vaccine, a vaccine that can be kept in the fridge, that is stable for a very long period of time. How big an impact would such a vaccine in the United States have? You talk about the super low temperatures that particularly the Pfizer vaccine has got to be held at. How big a problem is that cold chain? You mentioned it just a moment ago.
Yeah, I think the cold chain storage is a challenge, and part of that is because it's a process that is just not something that we normally use. So the infrastructure was not already there prior to distributing this vaccine broadly. There are places that have the infrastructure in place, but they're relatively few compared to what we normally deal with. The Moderna vaccine has fewer cold chain storage issues. So what we're hearing is that places that have had challenges with getting the ultra low freezers or getting being able to distribute the large number of doses that come in the shipments of Pfizer are going with the Moderna, and then the Pfizer vaccines are being allocated to places that can manage the process a little easier. The AstraZeneca vaccine and some of the other ones that are a little bit further in the pipeline, or not as far in the pipeline, sorry, have fewer cold chain storage issues. And I think that will be huge, not just in the US, but globally, where cold chain can be a real challenge. So I think we're excited to see, we saw the reduction in the challenges with Moderna, and we'll continue to see that in some of these other vaccines that are coming down the pike. It'll be really important for getting vaccines ramped up broadly across the globe.
Lauren, we have now seen a reported case of the UK variant, which is more transmissible. I think it was in Colorado. How big a source of concern will this be? And would you expect this virus variant now to have a significant impact in the United States?
I think we were all expecting to see it. We didn't know where it would pop up on our sequencing data first in the U.S. But it's interesting to call it the UK variant, because what we're really seeing is that the UK first detected it because of their exceptional sequencing processes and the volume of samples that they process through those pipelines. As you can see, we're sort of seeing it all across the globe, and this Colorado case is just the first one. It's interesting that it's in a person with no travel travel history, which means that that case probably came from someone else, which means there are probably many more that we just haven't detected yet. So I think as we start to see the backlog of sequencing data be added to some of these databases, we will see many more of these cases. The transmissibility is definitely concerning, even if it is not more, deadly, or if it's not causing worse or more symptoms. I think everyone is concerned by any variant of that shows increased transmission, because that ultimately at the population level is going to mean more cases. And more cases is something our healthcare system just can't really manage right now. We are strained across the country. We're strained in many situations across the globe. And so hopefully with more data on this strain with on this variant with increased transmission, we'll also see a push towards re-upping our commitment to those interventions that allow us to stay safe. So masking, social distancing, all of those things that we've been hearing for so long continue to remain important. And the vaccine is giving us a lot of hope right now, which is really exciting. But ensuring that we protect our population, especially our vulnerable population that may not be able to access the vaccines right away as we ramp up scale, it's going to be hugely important to keep those measures in place.
Lauren, thank you very much indeed for your time this morning. Thanks for the update. Lauren Sauer at Johns Hopkins. This is Bloomberg.
新型にはなんと2万点以上全身でついてます。なので2万点あることにより、その情報が取れない、平面がないんですね。なので全てをスキャンすることができるので。どちらにせよ自分のサイズを1回最初から、適正なものを発見してそれを買って、家に届いてきたらぴったり非常にハッピーというのがやっぱりしかるべき姿かなと思ってます。
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
central banks are showing no sign that they want to take their foot off the gas.
Domestic activity is still really in the doldrums.
We could see the first quarter dip back into negative territory.
I'm expecting a fairly tumultuous year coming.
We do have some risks out there. It looks like an asset bubble is brewing.
The post-vaccine rebound is going to be incredibly V-shaped and quick.
It will be V-shaped for some. It may not be V-shaped for others.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
And a very good morning, everyone, from New York City and from Berlin, and to our audiences worldwide, a very good morning. This is Bloomberg Surveillance, live on Bloomberg TV and Bloomberg Radio. I'm Carol Massar, alongside Matt Miller, Tom Keene, Lisa Abramowitz, and Jonathan Farrow. They have the day off. And what a day, what a week it's been, kind of, Matt. When I remember when we would work in holidays past, it would be very, very quiet, nothing going on. There has been so much going on between Brexit kind of wrapping up there. You've had another pandemic relief bill here in the United States. We're seeing lots and lots of individual stocks actually hitting records. We've been watching things like Apple. We've been watching Bitcoin hit records. So it's not been a quiet holiday week.
No, not at all. You know, typically the European Union does like to wait until Christmas, New Year's to get things done. I remember the Euro crisis I was in, working late on New Year's Eve in 2010, waiting for a resolution to that. But it is true that in the U.S., we have historically, I would say, been more sensible about the year-end holidays, and that has not proven true this year. When I say we, I mean Americans, of course. Not sensible at all. Waiting until the last minute to sign things, a lot of unemployment benefits being derailed for millions of Americans. And then now, so fascinating to watch Mitch McConnell go directly against President Trump's wishes and shoot down the $2,000 stimulus checks, placing them effectively in a poison pill package so that they can't be passed by the time this Congress finishes on Sunday.
The only thing I will say, Matt, is I think Mitch McConnell has something in his pocket. We're going to talk about this with Kevin Cirilli a little bit later on, because it's not only the relief package that was at issue. There was also a defense bill which had some ancillary issues connected to it. And I do wonder if right now Mitch McConnell is looking for some negotiating tactics when it comes to the Democrats. And I think that's something we'll have to dig into with Kevin, because I feel like it's never, in D.C., it's never about one clean issue. It's all these other issues that connected or get connected ultimately to legislation or proposed legislation. So we'll see what he has to say about that. Having said that, we can't ignore that it's a big virus news. The Astra-Oxford COVID shot gaining approval in the UK, although as you dig a little bit deeper into it, it sounds like it's maybe not as effective, and there's still U.S. testing to go through. So I think there's still more to be learned about this next vaccine. But again, it's just a reminder that we've got lots of drug companies, lots of teams around the globe that are working on individual vaccines, and all of those vaccines will ultimately be necessary to vaccinate the billions of people around the globe.
Yeah, but that wasn't enough, that vaccine news, to push markets much higher. And I think it's interesting, you see the stimulus news moves markets more, it looks like, than vaccine headlines. Take a look at the S&P futures are up a little bit, but if you look at if you look at European markets, you'll see we have gone absolutely nowhere today. We're up and down on the FTSE, we're up and down on the DAX, but not gaining any real traction, basically coming back to unchanged every 10 or 20 minutes. So the AstraZeneca headlines, when they came out this morning around 8:30, they did move markets minimally for a moment, but that gain turned around and dissipated right away. We do see Bitcoin putting up another all-time high today. At one point, it reached $28,572, and is currently trading at $27,782. So Bitcoin is one of the places where we've seen actual market movement, but you can see, well, from this board quite well, everywhere else, there's a whole lot of nothing.
Yeah, it is starting to kind of mellow out a little bit. Let's see what our first guest this morning has to say. Steen Jacobsen is with us. He's Chief Investment Officer at Saxo Bank, joining us on this Wednesday. Steen, nice to have you here with Matt and myself. You know, it has been a year of extremes, even though it's a little bit quiet on this Wednesday. But whether it's Bitcoin, whether it's IPOs, whether it's SPACs, whether it's some of those big FANG stocks here in the United States, and we've seen big global moves, how does that carry over or maybe set the stage for 2021?
It's more of the same, and I think you're leading into your question. The conversation between you and Matt is clearly indicating that we're all right now waiting for January 4th and the runoff in Georgia to set the stage for what is the next level. And I think to some extent Mitch McConnell is playing that card. He wants to be seen to be fiscally prudent into that sort of lead off and deciding what's going to be the next 2 years before the midterm election. So I think there's a very big political game going on in Washington in terms of the U.S. market. But in terms of policy response, we know exactly what's going to happen in 21. Any slowdown in the economy, any increase in the virus cases will be met by easier monetary policy by Fed and global central banks. And the fiscal purse will sit very, very loose on the politician, whatever color, brand, ideas they come from. It's all about supporting a market with no looking at the actual detail and unintended consequences. So, you know, more stimulus, but I think for me, deep down, the only question that really matters to me is where we end with 10-year U.S. interest rate in 21. If it's 150, 200, I think the rate sensitivity of the stock market will come to full play.
Do you really think we'll get there? Wait. Do you really think we'll get to that rate on the 10-year?
Absolutely.
Wow.
Absolutely. I think two things are going on. I think we have been so dependent on the digital online transformation that the physical world, the physical infrastructure, no longer can actually follow the success of that. So in other words, we've been too successful in digitization and online sales going on to the extent that UPS and FedEx today cannot get vans to do the last mile delivery. We see shipping rates across the globe reaching all-time highs together with the stock market, not based on loose monetary policy, but simply the fact that the infrastructure no longer is able to deal with the success of this online story. That is inflation in itself. On top of that, we have had an underinvestment into the mining sector for years upon years. And the same mining sector sits centrally into this theme of green transformation, the green cabinet that Biden talks about that he's appointed, the EU deal, which is green, and of course, China 2060. So absolutely, I think inflation is coming back in 21. And for the record, I think growth will be much higher than the very negative outlook that we have for central banks right now.
So 1.5% to 2%, does that mean we see more movement from the Fed at the year end, Steen, if we see the 10-year rate get to that level?
Of course, the position of the Fed right now is dovish, and with the changes of the voting members coming into the Federal Reserve Board for the new year, they're getting even more dovish. So they come into the year with a very dovish stance, wanting to do more on the downside. So first they need to move to neutral, which I think is really what 21 is about for Fed. But they could, if they see a huge surprise on inflation, they'll be caught short. Don't forget, the Fed does not expect themselves in the dot plot to move before 2024. That is absolutely unrealistic in my mind. And for the record, again, I think Fed is one of the worst predictors of growth in the U.S., if anybody, of anybody.
So I'm just wondering because, exactly, they said they're going to hold pat until 2024. And if we do see the kind of inflation that you're talking about, if we do see rates creep up, if assets continue, if markets continue to act as irrationally exuberant as the Airbnb IPO proved, the Fed has to do something maybe beyond moving to neutral, don't they?
Yeah, no, that is my take, Matt, but I'm just making the case here that we first need to move to neutral and then we move into a hiking cycle. And when we get to the hiking cycle, I think it will have a detrimental negative impact on the stock market, because the fact is that if you look at the NASDAQ 100 index, they have had no earnings increases over the last 2 years. So all of the increase in valuation that we see in our technology, mainly portfolio, is from the fact that we have an interest rate sensitivity supporting the stock. So in other words, the worse the economy gets, the more support you get from the interest rate sensitivity part. And inverse, when we go to a high inflation, a higher steering rate, a higher capacity utilization, yes, clearly the rate sensitivity will be very negative for the technology in particular.
All right, Steen, thanks so much for joining us. Really appreciate your time. Steen Jakobsen, Saxo Bank Chief Investment Officer. I wish you a happy new year, a happy socially distanced and masked New Year's Eve. Carol?
Man, 1.5–2% on the 10-year. Taper tantrum. That would have to be forthcoming.
Maybe
in
a little bit of both.
I'd have a little bit of both. I mean, I think it would shock the markets. I think we know the Fed has consistently and constantly say, Matt, that they are going to be data dependent. They're going to watch what's going on, certainly around the globe. But if we did start to see inflation tick higher, I don't know that I agree with his assessment. I think there's a lot of things that are potentially keeping inflation down in 2021. We'll have to see. I guess it depends on demand and how much all of this loose money that's been floating around. But we had a lot of cheap money and a lot of money come into the marketplace coming after the financial crisis. And what we got was a very long but low growing expansion. And I wonder, Jay Powell has talked about that happening again. We'll see if that's what we ultimately get in 21.
Well, it'll also be interesting to see what happens with fiscal policy alongside the Fed policy, right? Because if Steen is correct and the Fed moves to neutral and then starts to contemplate tightening, at the same time as the government is doling out $2,000 checks every quarter and spending $2 trillion on an infrastructure package, you might not see the kind of taper tantrum that you saw last time. And there's so much cash on the sidelines as well. This financial repression has been pushing people into riskier and riskier assets, even if that rotates back into safe names like Apple, you're still going to see the kind of run-up that you saw in 2020, 84% the gain. By the way, Apple is worth $2.3 trillion now.
It just means it sets up for an interesting year in 2021. All right, coming up, Eric Nelson, Wells Fargo macro strategist. You're watching Bloomberg Surveillance and listening to Bloomberg Surveillance on Bloomberg Radio and Bloomberg TV. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Senate Majority Leader Mitch McConnell is rebuffing both Democrats and President Trump on bigger relief checks. He's blocked an attempt to force quick action that would increase direct stimulus payments to $2,000. The president warned that failing to act now amounted to a death wish by Republicans. A new variant of coronavirus that emerged in the UK has now been found in the US. That's raising concern that a more transmissible strain could spread widely across the country. A man in his 20s from Colorado is the first American known to be infected with the mutated form of the virus. He has no recent travel history. And a Republican congressman-elect from Louisiana has died from coronavirus. Luke Letlow was elected in November. He was 41 years old. Letlow was hospitalized with the disease on December 19th. British Prime Minister Boris Johnson plans to rush his Brexit trade deal through Parliament today. He's confident that it will be easily approved. A prominent group of hardliners in Johnson's Conservative Party plans to back the accord. The main opposition Labour Party will also vote in favour, even though it calls the agreement inadequate. And Bitcoin just set another record high. The world's largest cryptocurrency surged above 28,000 today. It's risen more than 47% this month and has almost quadrupled in 2020. That hasn't stopped critics who question Bitcoin's validity as an asset class. They're skeptical of its speculative nature and boom and bust cycles. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
we have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need is surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
If you designed this from the start, you would have wanted more emphasis on needs, on state and local government, on unemployed people, on evictions. You already have some of that, but have more of that on loans to small business, not based on giving everybody a check.
Sounds like he agrees with what Larry Summers had to say. That's, of course, Adam Posen, president of the Peterson Institute for International Economics. And listen, Matt, I think there are many who are out there that would argue that said we really needed targeted stimulus and relief programs. I mean, you talk to anybody in the restaurant industry, and they really feel like they have been forgotten. They really have been largely forgotten. There are individuals who can't make their rent payments, or they can't make their mortgage payments. They can't put food on their table. We've been talking about that all week. And so we do have to make sure that the stimulus is going to the right place. I would argue that if we overdo it a little bit and some people who shouldn't get stimulus do, that's just going to be, I think, just one of the, problems that arise out of having to get stimulus out pretty quickly. And I think that's just the way it has to be. But I do think we have to ensure that we're getting aid to the people who need it.
Yeah, well, I mean, remember Ben Bernanke wasn't worried about overshooting with the economy either. He said on 60 Minutes famously that inflation is something they can control. Deflation is more of a problem. And I'm sure there are a lot of people out there who argue for more targeted stimulus. There are some people out there who argue for a universal basic income, including, well, they're no longer with us, but, from Thomas Paine to Milton Friedman, there's some real capitalists out there who would have argued for a universal basic income. Larry Summers is not one of those people. He is not a fan of that principle, has never been, and he certainly isn't a supporter of $2,000 stimulus checks or letting the economy overheat. Let's get over to Kevin Cirilli right now, Bloomberg chief Washington correspondent, who has spoken to Dr. Summers about this. I think the twist that we saw yesterday, Kevin, is even more fascinating. Mitch McConnell going directly against the president's very outspoken wishes, killing $2,000 stimulus checks by not allowing a quick vote and then wrapping them up with something the Democrats will never agree to.
Three things. First and foremost, it now, because of that move, makes it increasingly unlikely that there is a path forward in the Senate between now and when the Senate turns over to a new Congress for there to be a vote on $2,000 stimulus checks. There is still I would say, a single-digit chance that still gets happened or still gets a vote. But it's interesting, secondly, the politics of this. And what's gotten lost in President Trump's message is that while he did come out in favor of $2,000 stimulus checks. He also said he wanted to get rid of some of what he said was wasteful spending in the $900 billion bill. So it wasn't just a proposal of $2,000 stimulus checks. He also was proposing correcting some of the funds that were allocated for the pork, as he would describe it, for projects around the country. And then lastly, if you look at this from a matter of Leader McConnell's 3 items on his to-do list, getting the defense reauthorization bill through today, getting there to be some type of closure as it relates to increasingly contentious vote on certifying the results of the 2020 election, despite the president's continued unfound claims of there being voter fraud, and then also having to fight for Georgia to keep the majority. Leader McConnell yesterday, really on the Senate floor, speaking in a very stoic, somber tone, which is to be expected based upon my reporting of him over the years, but still a to-do list that would make anyone in the last week of 2020 nervous.
Well, and the thing that I find interesting, Kevin, is that Mitch McConnell basically saying, I'll consider more stimulus packages, but he's also, as you said, I want to consider some other things. And you mentioned, an investigation into alleged election fraud. He also wants to rework that law that shields technology companies from liability for user content. It's interesting. What is the goal here for Mitch McConnell? Because those are 2 issues, obviously, very sensitive and very near and dear to President Trump.
For him, Carol, the goal is to keep the majority for Republicans in the Senate. But in terms of when I spoke with one Republican lawmaker yesterday about whether or not there could still be some type of vote on the $2,000 stimulus checks, you just hit the nail on the head. You could, and again, this is a big if, have a situation where there is a juxtaposed piece of legislation for which would have poison pills for various politicians, depending on which camp they are in, where you could lump Section 230 and the Communications Decency Act with something like $2,000 stimulus checks. Well, that presents a really difficult choice for lawmakers who might agree with one of those positions but disagree with another. The bottom line, Leader McConnell is a political chess player.
Yeah.
He knows this better than anyone, and he knows what he's doing.
I have to ask you, too, though, is there still some support? Is there any support of the Republican Party and the GOP behind President Trump to continue fighting this election? Because it's interesting that that was still in there.
Polls would suggest that the president, from a political matter, his questions about the legitimacy of the election and the trust in the election process have resonated with the base of the party. There is no evidence to suggest that any election fraud took place. The president's then Attorney General William Barr has said as much publicly. And in terms of where this goes, though, from a political angle, Carol, I would note the political strategy of someone like a Senator Ted Cruz, who's running likely for president in 2024. So he's trying to inherit some of that political argument. Vice President Mike Pence is going to be presiding over these proceedings. He's in a tough spot in terms of keeping the Trump base if he wants to run for president. There's a lot of competing political interests at play right now.
I would say this is why you need term limits. I'm just going to put that out there, Matt, because this way, because people are constantly thinking about, right, Kevin? They're constantly thinking about their next election.
Well, President Trump back in pre-2016 wanted term limits.
Yeah, well, that's interesting.
He still could run again, right, in 2024. I wonder what, Kevin, we should think when we watch these social media companies that are worth so much money and continue to rise in price. Should we be worried that they are stripped of their protections eventually, anytime?
I keep going back to this. Look, I think if there's one trend that Bloomberg has done such an incredible job in terms of reporting, it's how governments around the world are scrutinizing tech companies, whether it's in China with the Communist Party of China looking at Jack Ma, but here in the United States, there's a process. And so you have Democrats who are arguing that there should be some antitrust investigations, and you've got Republicans arguing that there ought to be a look about how some of these, the Communications Decency Act is looked at. And so, but there's a process here in the United States that is playing out, and I would anticipate that regulatory forecast and the conversation around that is going to continue regardless of the outcome in Georgia.
Right, not always a perfect process, but it is a process, which is a good thing. Kevin Cirilli, thank you so much. As we've always said, the hardest working man in Washington. So coming up, everybody, we're going to check in with Eric Nelson, Wells Fargo macro strategist, talk a little bit more about the market trade. It's really, really quiet. You can see S&P 500 futures just up about 12 points, up 0.3%. But we continue to see some records in some of those big tech names like Apple. So we'll see what he has to say about the outlook for 2021. I'm Carol Masser, along with Matt Miller on Bloomberg Radio and Bloomberg TV, and this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Good morning. morning once again, everyone. I'm Carol Master along with Matt Miller. This is Bloomberg Surveillance. John, Lisa, and Tom, they are off on this Wednesday. Quick check on the markets for you, and it's quiet. It's a holiday-shortened trading week. We do have S&P 500 futures, though. They are indicating another higher open here, just up about 12 points. You've got the euro at $1.22. That 10-year yield up to 0.94, so seeing a little bit of movement. And you've got New York crude just up another %. There's expectations of U.S. stockpiles reporting some declines. That's due out later today. So again, some support there in New York crude. I do want to point out Bitcoin hitting a new record. We're actually on track for our biggest monthly gain since 2019. But I just want to point it out there because it's really been one of the big stories, kind of an indication, Matt, of just the sentiment and all that money really, and investors kind of looking for yield out there. All right, that's your market chat. Matt?
Yeah, investors looking, well, I think maybe some of them worried about what's going on with all the liquidity sloshing around, central banks looking to weaken their own fiat currencies, and that was one of the original ideas in the Bitcoin community, that you need to protect yourself from that kind of thing. Speaking of protect yourself, the U.S. has been trying to protect itself from Russia to some extent by putting some sanctions on a gas pipeline project that comes directly down here to Greifswald, Berlin, over there. Vanessa Desam from Bloomberg News, she's a power and renewables reporter. She's been covering this very closely. And regardless of the attempts by the U.S. to stop this, Angela Merkel and the Germans have pushed it through together with Vladimir Putin. They're on the last leg now and just about to finish before the U.S. can tighten the sanctions even further. Vanessa, welcome to the program. Are they going to finish this? Is Nord Stream 2 going to get completed?
Hi, thank you for having me there. So yeah, it sounds like Russia is closer to its objective to complete its really controversial project. So there are still some work to be done, but analysts estimate that Nord Stream 2 could start operations as soon as the...
I'm going to cancel the order that I placed, as you can see, to buy euro. Took too long, and I just don't know how long it will take in order to get it executed. Let's wait for better time.
Nord Stream 2 told us yesterday that there are about 30 kilometers in Germany to be laid. It is an important milestone, so it was an important step, but you know, they still have some way to go. The bulk of the works will actually happen in Denmark's waters. They are using Fortuna vessel, which can lay about 1 kilometer of pipes per day. So the completion is not foreseen before the end of next year, but, you know, it's closer to that objective.
Hey, Vanessa, this is one of those stories. It's an important one, but it's always one of those that I say, okay, our audience is listening and they're watching and they say, well, why do I care? It makes President Putin very, very happy, but it also cements kind of his control in a big part of Europe specifically, and Germany, in terms of getting gas out. The U.S. and others are a little nervous about how reliant Europe is going to become on Russia specifically when it comes to energy and gas.
Yeah, so actually Europe is already reliant on Russian gas.
Fair enough.
It's a big part of it's a big part of natural gas imports comes from Russia. And what you know, Europeans say, such as Germany, what Russia and Germany said, is that they need that gas. That gas production in Europe is declining, and it's set to decline even further. So they will need gas coming from Russia, which is much cheaper than the one that would come from the U.S. In vessels. So that's the biggest argument that it's going on here. Europe is going to need more energy sources. Russia can supply that cheaper than the U.S. and the U.S. can also participate in this market. But definitely Russia's dominance will increase after the pipeline is concluded.
Right. It's all about those global relationships. Yeah, Matt, go.
You have to also consider that investors care, because if you own shares in Gazprom, if you own shares in Uniper, if you own shares in Engie, even if you invest in, you know, BASF, or their competitors like ExxonMobil, Royal Dutch Shell, BP. This is a really important story, not just because German euros are going to help fund Vladimir Putin the next annexation of Crimea. Whatever he decides to do next, those euros are coming directly through that pipeline from Germany to Moscow, but also they're beating out these competitors in the delivery of natural gas and other fuels.
It is important to say that natural gas is a very important part of Europe's energy mix. So you are correct, as there are a couple of companies that are backing this project, and they are all betting in huge profits coming out of it.
Right. Listen, it's always follow the money here. Interesting story and a reminder of some of the relationships that are continuing to evolve around the world. Vanessa, thank you so much. Really appreciate it. Vanessa Dezem, Bloomberg News, and you can check out her full story. Just go to Bloomberg.com, of course, also on the Bloomberg. All right, want to talk a little bit, too, about the trade. It's very quiet this year. We've talked about that, or at least quiet today. But let's see what Eric Nelson has to say. He's a macro strategist over at Wells Fargo, and he joins us on this Wednesday via Skype. So, Eric, it's interesting. We were just talking about with Vanessa, Russia pushing ahead with this gas link. I mean, there's a lot of relationships and global relationships going on, as we know. China and Europe also moving ahead just this week on a big investment relationship. So when you look at some of the big global macro stories that are out there, we've had a lot this past year, whether it was Brexit and others. What are the ones that you are focusing on that you think will impact the markets in the new year?
Sure, that's a great question, Carol. And I think it's something that markets are not that focused on, given that COVID is front and center and risks number 1, 2, and 3 for a lot of people. I think the big one that people are really ignoring is the U.S. and China. It was a huge theme in 2018 and 2019, and it's really fallen off the market's radar in 2020. There's also a pretty widespread consensus that under a Biden administration, there's probably going to be a relatively benign relationship between the U.S. and China. We're a little bit less convinced of that, though. For one, there is very much bipartisan support for being tough on China on both sides of the aisle in the United States. There's not many issues that we can really say that about here in the U.S. The other thing you have to keep in mind is, the U.S. and China, the Phase 1 deal that was signed last year, China has not lived up to its end of the bargain, so to speak. It has not bought all the goods that it said it was going to throughout the course of 2020. So that's going to be another issue that could come up under Biden administration. And also, you have to wonder and maybe worry about, just the risk of more Chinese aggression in places like Taiwan and Hong Kong.
Yeah, that's a really good point.
It's especially interesting as the EU and China approach this agreement to work more closely together. Eric, let me just ask you to pull your microphone out of your neck there. It's stuck in your collar, so you're getting cut off a little bit. I wonder about an issue that's very closely related to that, and pretty much everything else probably in your investment world, Eric, which is the U.S. dollar. So many people have forecasts that it's going to continue to fall, and that helps make U.S. exports cheaper. But if that doesn't happen, then the China relationship is going to be even more problematic, isn't it?
Yeah, it's a bit of a mixed bag because, the stronger the yuan, the renminbi gets versus the dollar, the bigger headache that poses for China. If they let the Chinese renminbi appreciate, that's going to pose a risk for its export market, of course. But if they try and lean against that, then that's completely, running afoul of their commitments under the Phase 1 trade deal. So I think a weaker dollar and a stronger yuan does bring its own challenges. But I think the key, though, is for the global economy as a whole, a weak dollar is very much a good thing. And I think the overall, how does China benefit from that? I think it's a net positive for them as well on the economic front.
Larry Summers was, I think, encouraging Janet Yellen to adopt a strong dollar policy when she steps into the top spot at Treasury. If President-elect Biden, if the Democrats win these Georgia runoffs, does that mean we can count on even more dollar strength? And how do you see those election results coming in?
Yeah, I think the odds of the Democrats winning both seats are very low. if we assume both races are 50-50, maybe the odds of a Democratic sweep on both sides is 25%. I think that odd, the 25% odds is even too high. Purdue did very well and probably will win handily against Ossoff based on current polling. But let's say, for argument's sake, that the Democrats sort of pull off the shock victory. The initial reaction, in my view, is going to be dollar strength. That means policy discontinuity, concerns over regulatory and tax changes. And, I think what will become pretty obvious immediately, though, is that there's not a lot that can get done with a razor-thin 50-seat majority in the Senate. Big sweeping changes in taxes, regulatory structures, the filibuster. These things are going to be really hard to do when you're counting on Harris as the tie-breaking vote, and you've got people like Joe Manchin, on the Democratic side, who kind of straddles both camps. So I think, all in all, even if you get a Democratic sweep, the longer-term market implications may be relatively limited.
Yeah, it's certainly something we'll find in the new year. Hey, Eric, thank you so much. Eric Nelson, Wells Fargo macro strategist, joining us from Skype. Listen, Matt, there's so much, to consider. It was interesting when he talked about China. There was I think China came out with its growth estimates for 2019, and they updated it to 6% from 6.1%. Having said that, I think it's the only developed nation that is expected to see some kind of growth come the new year. And so I think the world is going to be largely reliant and watching certainly what comes out of China in terms of really much needed growth in the new year.
Yeah, well, we've definitely seen a lot more highly priced deals going into China and to developed Asia. The EU and China are expected still to announce a pledge to work more closely together. We keep watching out for that. And Boris Johnson is going to be holding a press conference at 5 p.m. I'm guessing that's London time, which makes it noon in New York. Coming up, Gerald Storch, former CEO of Toys R Us, and Hudson Bay joins us. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Senate Majority Leader Mitch McConnell has made it unlikely that there will be quick action on an increase in direct stimulus payments. McConnell says the Senate will consider boosting payments to $2,000, but that will only take place in conjunction with other demands from President Trump, such as re-examining special protections for tech companies. The U.S. is vaccinating an average of only 200,000 people a day against the coronavirus. Data show that while Operation Warp Speed has distributed millions of doses, some states have been slow to get them into people's arms. According to a Bloomberg News analysis, the U.S. almost certainly won't hit the Trump administration's goal of 20 million vaccinations by year-end. And in Germany, the daily death toll has surpassed 1,000 for the first time since the pandemic started. There were more than 1,100 deaths there in the 24 hours through this morning. Germany joined its European Union partners in starting vaccinations on Sunday. And Secretary of State Mike Pompeo reportedly is deciding whether to designate Cuba as a state sponsor of terrorism. That's according to the New York Times. The move would be a thank you to Cuban Americans in Florida who turned out for President Trump in the election. It would also make it tougher for the Biden administration to improve relations with Cuba. The U.S. Supreme Court is being asked once again to overturn election results. The Trump campaign wants justices to review Wisconsin's decision to count 50,000 absentee ballots, and it wants a decision before next Wednesday. That's when Congress meets to open and count the certificates of Electoral College results. More than 50 court challenges to the election have already been rejected. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Substantial further progress means what it says. We'll be looking for an inflation to be substantially closer to our 2% longer run goal before we start making adjustments to our purchases.
That's a long time to be very accommodative, but that's basically the horizon.
They can buy more bonds and they can buy longer maturity bonds. And that would put more downward pressure on long-term interest rates.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Probably seen 8 years of change in 8 months. You now have digital being about 20% of the total purchases. That means that 80% is still being done in a physical store. So we shouldn't be writing off stores because stores are still critically important. I think that a lot of the changes that we're seeing are here to stay.
That was Stephen Sadov there, MasterCard Senior Advisor. Formerly, of course, he was the CEO of the famous New York department store Saks. Let's take a quick look at what's going on in markets. Here in Europe, really not much at all. We've been up, we've been down, but really not very far away from the zero mark. S&P futures a little more exciting, up about 1/3%, even after Mitch McConnell shot and buried the $2,000 stimulus checks that President Trump and Nancy Pelosi had been pushing for. You can see euro dollar a little stronger right now as the greenback continues to show some weakness. Investors feel comfortable enough to sell a little bit of U.S. 10-year, the dollar or the yield there rising just a bit. And Bitcoin, I think one of the interesting stories as it this morning hit once again a new record high, $28,500 and change. Right now it's trading up 4% at $27,911.
All right, good stuff. We got to talk about retail, Matt, because of course we're wrapping up the holiday season, and it was a holiday season unlike any others. Want to get right to our guest because Jerry Storch is with us of Storch Advisors. He's a management and advisory to a lot of other retail companies that are out there. CEO and founder of his own firm, former chairman CEO of Toys R Us, former CEO of Hudson's Bay Company, former vice chairman of Target, so understands the retail industry so well. Jerry, nice to have you with Matt and myself on Bloomberg Surveillance. You know, we've had the conversations about, you know, a lot of the trends that we've been seeing in retail got sped up this year because of the pandemic. What trends really stand out for you that you think are going to be significant drivers of retail going forward? And good morning, by the way.
Good morning. Obviously, you have to start with the shift to e-commerce. I mean, this is just massive. It was happening before, but there's no doubt it got tremendously accelerated. I think what happened now is people who weren't as prone to use e-commerce, they had to because it was the safe way to buy things, and they found out not so bad. So a lot of that's going to stick. So you have in fact seen an acceleration towards e-commerce. Another big trend is the shift away from apparel, from clothing, into hard lines, electronics, other types of physical goods. And so apparel has been in long-term decline. And if you look at it over a 10-year cycle, clothing is down. Not so much people are, are wearing, going out without any clothes on or wearing less clothes, but there's been a big casualization of the workforce, so you buy less expensive clothes. And then even for the same clothes, the average price point has declined with the advent of fast fashion and all the discounters taking huge market share. I mean, the biggest clothing sellers in the U.S. right now are Walmart, Target, and Amazon. So the average price point has declined. So what are people doing with that money? They're buying hard lines, they're buying electronics, and now in the pandemic, for the home. And, I, for one, I don't think I'm alone. I started learning more about how to bake. And now that I love the pathos and the chemistry of baking, I'm going to keep baking. So there's going to be a lot of shift, even more accelerated, away from apparel and towards home. You have the shift away from the department stores and towards the discount stores. That's continuing, only accelerated by the pandemic.
It's funny, I, as well, Jerry, have really taken up cooking over the past few weeks and months, only because of this lockdown. I will point out one clothing retailer that's done quite well, at least partially clothing, is L Brands. More than doubled this year, but that's because, of course, they don't sell office clothes, right? They sell maybe the less appropriate things you would wear to the office through Victoria's Secret, or the things that you would use at home, like Bath and Body Works. We had a guest on a little bit earlier, Steen Jakobsen, who said one of the big problems for retailers right now, Jerry, is that the logistics is so expensive. Shipping stuff, you can't find a truck out there. You know, it's tough to get things on boats at a decent price. Do you see that kind of inflation for companies that need to ship their goods to people who now order everything on the internet?
Well, I think there's the real topic is that there's a negative arbitrage in the marginal profitability of an item that you sell and deliver to someone's home on the internet versus when the customer comes walking into the store and does all the transportation themselves and just picks it off the shelf and takes it home. And so for a lot of retailers, a lot of companies, this is the most frequent, by the way, assignment that I get at Storage Advisors to help people figure this out. For a lot of retailers, they have to sell twice as much on the internet, twice, to get the same marginal economics, the same marginal profitability as what they sell in store. Because you already have the stores, all the people are already there. And the customer does that last leg themselves. So that's really the biggest issue. And by the way, during the pandemic, FedEx and UPS, they've had capacity constraints, and they said, okay, let the market clear it, and they raised their prices. They put in big surcharges, so it costs more than it normally did. Eventually, that will equalize, that will come down. So I think over time, as the system gets built out, as e-commerce is a higher percentage of total sales, that penalty goes down, and that freight penalty goes down over a period of years, not instantly, and for some companies, what I like to look at is the margin pool. You know, how many dollars of margin are in that shipment?
Right.
If you're sending someone, you know, a pack of toilet paper, there's not a lot of margin, but it's bulky. You know, so it's related to the cube more than anything else. But if it's a diamond ring, no problem. You know, because you could $1,000 ring, you could have $500 of margin in the thing. The transportation cost doesn't matter, but it does when it's only $1 or $2, and that's why you have to look at each retailer separately and say who has best marginal economics, who has the best margin pool to ship that product to the home, so that the shipping becomes less important. For a luxury retailer, it's not very important because the customers are spending a lot of money with a big margin rate. The shipping cost is trivial compared to the overall margin pool.
Yeah, hey, listen, I want to ask you, though, Jerry, if you go up and down the avenues here in New York, even across from Bloomberg headquarters, there's multiple retail stores that were here before the pandemic, and they're not anymore. Who takes advantage of that retail property on the other side of the pandemic? Who are the retailers that you think are going to be able to snap up some of those smaller locations or that really need more locations at this point, that there will be demand for their goods?
Right, we have to separate New York real estate from all the rest. It's very different in Manhattan than it is elsewhere in the world. For most of the United States, the winners are clear. It's Target, Walmart, Costco, these big discount chains. They have done fantastic, not only, by the way, on the internet, but a lot of times their store numbers have been up when you look at how they're doing, because people have had fewer places to go to, and they've been consolidating their trips, making big average ticket purchases when they go to those places. So those are big winners. Other big winners are the home people, like Home Depot and Lowe's. These numbers have been phenomenal that they're reporting, and I don't think that's going to, soften, but it's not going to change in terms of a fundamental long-term trend, as we were discussing. Other winners, people like the dollar stores. I mean, Dollar General is just hitting it out of the park day after day, week after week. So is Family Dollar now that that they've got all the trends in their direction. So I think a lot of it's going to go to people like this. The mom and pops are getting crushed. I mean, they're absolutely getting crushed. I mean, if you only have a single store, you can't really, you have a limited line of offering. You've been killed by the pandemic. Maybe you weren't declared essential. Beyond that, you have capacity constraints. Meanwhile, you can't even afford to set up a really great internet site. And even if you could, you wouldn't be able to get the traffic to it. It could cost a fortune to pay Google
Jerry,
and Facebook for the ads to get the traffic.
I got to jump in. I wish we had like an hour just to talk with you. We're going to have to get you back because I love talking about retail, and there's so much going on. Jerry Storch of Storch Advisors, former CEO of Toys R Us in Hudson's Bay. Coming up, we're going to check in with Jim Paulson of the Luthold Group, Chief Investment Strategist there, talk a little bit more about the trade, see if he likes maybe some of the retail stocks, especially some of those beaten down names. We'll see what he has to say. That is coming up on Bloomberg.
debt. Things they didn't teach you in school, part 4. When we think of debt, we often automatically think of a horror film. But debt doesn't have to be the scariest thing in the world. If you found yourself with some debt that's stressing you out, here's how you can manage it. First, prioritize your payments and pay down the debts that are costing you the most. How do you find that out? Look at your interest rates on your monthly billing statement. If your credit card has a really high interest rate, you'll want to pay that off before paying off something like a student loan, which might have a low interest rate. The average interest rate on a credit card is 14.5%. So you're getting a good return on your money when you pay that debt off. Next, track your spending. Stick to a budget so you can know where you stand financially and start to save some money to pay your debts down. You can do this with apps like Digit, Acorns, and Stash. And lastly, breathe. Know that every financial mistake is fixable. You can always recover down the road, but it's best to get ahead of any mistakes that could lower your credit score. And a good credit score can save you a lot of money, earning you a lower interest rate in the future.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Central banks are showing no sign that they want to take their foot off the gas.
Domestic activity is still really in the doldrums.
We could see the first quarter dip back into negative territory.
I'm expecting a fairly tumultuous year coming.
We do have some risks out there. It looks like an asset bubble is brewing.
The post-vaccine rebound is going to be incredibly V-shaped and quick.
It will be V-shaped for some. It may not be V-shaped for others.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning. This is Bloomberg Surveillance on Bloomberg Radio and Bloomberg Television. I'm Matt Miller here in Berlin alongside Carol Master in New York. Tom Keene, John Farrow, and Lisa Abramowitz are off this week. A lot going on. Well, here in Europe, let me start off, Carol, with Brexit. It's almost, really, truly almost done.
Getting signed on the dotted
houses,
line? Yes.
Yeah, well, they have the commoners and the lords are going to be voting on it today in Parliament, and then you've got here in Berlin. You know, we're in the seat of the EU of the Euro presidency. They hold it until Thursday, and Ursula von der Leyen, of course, a German who runs the Commission in Brussels. They're about to cement a deal with Xi Jinping so that Europe will have a closer relationship with China. The question is that good or bad? And then in the U.S., you've got Mitch McConnell killing and burying Donald Trump's $2,000 stimulus check. So that's not going to happen. maybe until the next Congress. So there's a lot going on, but just not moving markets. Outside of Bitcoin, you really don't see a lot of movement this morning.
No, listen, it's really quiet. There's thin trade, and maybe we're not surprised to see it. Let's just bring up the boards for everyone, just so that you can see where we are on this Wednesday, because S&P 500 futures, Matt, we've been talking about it. This has pretty much been the trade throughout the morning, just up about 12 points. A little bit of support for crude, that 10-year note with a yield of 94. Let's see if we can bring up Bitcoin, because that is, as Matt mentioned, one of the outperformers of 2020, and we continue to see some more momentum. I think it was up about 3.5%, but we did see it, I think, go above 28,000 today to a record high. I think it's up almost 50% so far in the month of December alone. So, Matt, that's kind of what our year has been, like these incredible outliers. And then, you know, value, maybe it started to do better, and then it kind of backed off. It's just some strong outperformers, and the rest of the market kind of just moving along a little bit.
Yeah, no, the question is that rotation going to happen? And depending on who you talk to, a lot of people say it's already started.
Yeah.
And a lot of people aren't too sure. Let's bring in a guest who has a lot of experience with this kind of thing, even though it's been a while since a value rotation. Jim Paulson from Luthold Whedon Capital Management. He's the Chief Investment Officer there. I'm not saying you're old, but let's say you're our age, Jim. you fit in the same demographic with me and Carol. You were there the last time value stocks were hip.
He's seen a lot of cycles, is what you're saying.
Absolutely. So are we going to see it again? Is it possible that we rotate out of growth and into value now that actually some of the stocks I think of as growth stocks could now be value stocks?
You know, I've sort of moved away from thinking a lot about value or growth. I've thought more about sectors, because I think ever since the dot-com boom, we have really screwed up kind of the value growth trade-off. There's a lot of times I'll own parts of value and parts of growth, and I think that's a better way to approach it. I think a lot of the value space is already starting to outperform and will continue to outperform, but I wouldn't necessarily just buy a value ETF. You know, I'd still look at sectors. I think there's some sectors in there, the traditional value sectors I really like. I really like the global synchronized recovery play, which to me really hits a lot at the industrials and materials sectors, traditional, more value plays. I like the idea that we're going to have probably in 2021 the fastest world growth rate in a long time. And particularly in the United States, maybe the fastest growth here. I think it's going to be around 6%, so maybe since 1984. And to me, that says interest rates, yields go up this year, which would favor, I think, the financials in a big way, traditional value play.
So, Jim, wait, Jim, let me jump in.
Yeah.
Let me jump in, because Steen Jakobsen, who we had on earlier, talked about a 10-year maybe hitting 1.5–2%. And I do wonder if indeed we start to see rates going higher, if we see some signs of inflation. How does that play out essentially, though, when it comes to Fed policy? And what does that then translate into the financial markets, the equity markets? Do we see then ultimately a pullback as a result, even though we're seeing strong growth in the economy?
Well, I think that one of the things that's really interesting, there's a lot of unique aspects, Carol, about where we are today. But one of them is that this record-setting low yield environment and really inflation environment simultaneously. So as we lift off into this new recovery, we're not lifting off from 3 or 4% yields and 3% inflation. We're lifting from record, unprecedented levels. And I think they could go up a fair ways before they really become problematic for the economy and for the stock market. I look back, for example, to 1900, just recently, Carol, and took all the months when bond yields have been below 3% and looked at what's the impact on the stock market when they go up versus what they generally did if they're above 3%. When they've been above 3%, which is about 75% of the time since 1900, the stock market actually goes down on average when rates go up. But when you're below 3%, higher rates actually lead to a better stock market by a wide margin. In fact, all the months that we've had a 10-year yield below 3%, the stock market, when they went up, the stock market annualized almost 16% gains. And I think that the difference is if we take the bond yield from below 1 to 2, it'll actually boost confidence in the future. It might stoke animal spirits in the economy, moving us away from fears of negative yields in the United States and the like. So I think that'll actually be a positive rather than a negative for a while.
Got it. Jim, thank you so much. Jim Paulson, Luthold Whedon, Capital, of course, the CIO over there. Good to get his thoughts and some optimism there, Matt, when it comes to maybe the outlook.
All right, speaking of, going the other direction, maybe a little pessimism is needed. Let's bring in Andreas Kluth from Bloomberg Opinion. He is typically a positive guy, I will say. But Andreas, you have a piece out that caught my eye on Opinion about the EU-China deal that we're expecting to see this afternoon. I think Ursula von der Leyen is going to jump on a call with Xi Jinping. I'm not sure if Chancellor Merkel will be on that call, but they want to deepen their relationship, and you say that's a mistake. Can you tell us why?
I think it's a mistake because they rushed into this deal. The deal has been they've been in talks since 2013 for 7 years. And everyone agreed that it was stuck mainly for all these years, mainly because China wouldn't move an inch on the most important things, such as giving a level playing field to European firms and not using forced labor in China and adopting international conventions. And then everything was stuck. And then suddenly Xi Jinping, president of China, seems to have realized that with Joe Biden, a much more skillful leader in the White House is coming in on the U.S. side, and that this American leader will renew the transatlantic alliance, and that Europe and America could start presenting a united front against China in a number of policy areas. And then he personally, Xi Jinping, personally intervened and says, we got to make something happen. We have to have a deal. It could be a precursor to a trade agreement. We got to give something. So he seems to have given something, and my fear is that he gave very little, and the Europeans, just to have a deal, said, oh, great, let's do a deal with China, and as a result, undermined the incoming Biden administration before the Americans and Europeans even had a chance to talk about how they could have a combined strategy against China.
Andreas, talk about timing, and I want to dig a little bit deeper into that. But speaking of timing, just crossing the Bloomberg terminal, the EU and China giving political nod to that market opening investment pact, which is exactly what we're talking about. So it looks like full steam ahead. But I do wonder about the timing. It's just a few weeks from an incoming Biden administration. As you said, President Xi, understanding Biden is going to be a much more skillful negotiator. He understands global politics. But I do wonder about the EU side of this, that they weren't thinking, well, wait a minute, this has been traditionally, normally, historically, the United States and EU allies. And I do wonder about the timing here.
The timing here, well, first of all, from what I've heard, from my sources, the breakthrough was definitely initiated by Xi Jinping. Your question is, why was the EU so surprisingly receptive? And that has, unfortunately, to do something with Chancellor Angela Merkel, who has exactly until tomorrow, so one remaining day, to hold the rotating presidency of the EU in a body called the Council of the European Union. And she wanted to get a number of big deals done because she's out next year, and she wanted to have a legacy. One was to, we could talk about the internal EU deal, but one was this. She wanted to have a success, and she probably, on the council side, there was a nudge, hey, to the commission, hey, can we accelerate this? And that's what they did.
All right,
Andreas, I got to say, I'm pretty bummed out. I'm glad you could join us on the phone. I'm bummed out that I haven't seen you in the office in so long. I got a hardback copy of Hannibal and Me for Christmas, which is, for those who don't know, Andreas Kluth is an author, and he wrote Hannibal and Me about what military's history's greatest strategists can teach you about success and failure. When I see you next, I hope I get you to sign my book. Andreas Kluth there from Bloomberg Opinion. You can check out his... Thank you very much. You can check out his work on the EU-China deal that has just passed, this breaking deal on the Bloomberg. Type OPIN GO to get the latest from Andreas Kluth and the EU-China deal. They're going to go in on a political agreement together just weeks before Joe Biden comes into office and this administration changes. Coming up, Dr. Mercedes Carnathian talks to us, Northwestern University professor of preventative medicine at a time when we need it most. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Senate Majority Leader Mitch McConnell is rebuffing both Democrats and President Trump on bigger relief checks. He's blocked an attempt to force quick action that would increase direct stimulus payments to $2,000. The president warned that failing to act now amounted to a death wish by Republicans. A new variant of coronavirus that emerged in the UK has now been found in the US. That's raising more concern that a more transmissible strain could spread widely across the country. A man in his 20s from Colorado is the first American known to be infected with the mutated form of the virus. He has no recent travel history. A Republican congressman-elect from Louisiana has died from coronavirus. Luke Letlow was elected in November. He was 41 years old. Letlow was hospitalized with the disease on December the 19th. British Prime Minister Boris Johnson plans to rush his Brexit trade deal through Parliament today. He's confident that it will be easily approved. A prominent group of hardliners in Johnson's Conservative Party plan to back the accord. The main opposition Labour Party will also vote in favour, even though it calls the agreement inadequate. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Welcome back to Bloomberg Surveillance. I'm Matt Miller here in Berlin alongside Carol Master in New York. Tom Keene, John Farrow, and Lisa Abramowitz are out this week. There is a lot going on, certainly in politics. We see a Brexit deal, an EU-China deal, no deal on $2,000 stimulus checks, but maybe just as the rest of this year, the most important story, Carol, is the virus. We did see another vaccine approved today in the UK, the AstraZeneca-Oxford University vaccine, but it didn't seem to move markets much.
Hey, listen, I always go to this number on the Bloomberg. It's among our most read. It's our virus, update, a ton of stories. But we're right now at global cases, Matt, of 82 million. We're looking at deaths at 1.79 million. And in terms of the vaccine, more than 5.1 million vaccines have been given globally. But, Joe Biden, the president-elect, coming out and saying that it could take years for Americans to ultimately be vaccinated at the current rate. He's concerned about that rollout, the distribution. This rollout and distribution is key in order for our economies, people to get back to work, for economies to reopen, for everything to get back to normal. We heard a lot today about optimistic growth rates potentially for 2021. And I think in order for any of that to happen is we need to see an economy reopen. I mean, people still aren't flying. People aren't going to hotels. I mean, there's a lot of our economy that's still shut down. You see it certainly there in Berlin. Those numbers over in Germany have been rising as well. And, we're taking out record after record. So I think there's a lot that has to happen. And it's all key on this vaccine and really getting it out to people.
I'm ready.
I'm ready too.
I am ready. I will tell you, I have my, I have a gift certificate at BrewDog that's already sitting by my front door and prepared. I've got plane tickets
I know you do.
For Mauritius. I'm ready for this vaccine to get rolled out. And I'm hopeful, Carol, that it's going to start happening faster. It's going to start being distributed more quickly than it is now. I know there are some hiccups in the U.S. because it's difficult to get that kind of cooling technology. Who has super freezers just sitting around? Even the great state of Ohio is having trouble getting that vaccine out. But hopefully in the next few days and weeks, they'll be able to do it a little bit faster.
Well, let's see what our next guest has to say about this, because Dr. Mercedes Carnathan is Northwestern University Professor of Preventive Medicine, also Vice Chair of the Department of Preventive Medicine, joining us here. Nice to have you here with us, Mercedes. Let's talk about what's going on here. And, President-elect Joe Biden coming out, he's worried about the distribution and logistics. You are hearing about it, seeing about it firsthand. There's hiccups. Are you concerned that it's going to take a lot longer than everybody anticipated?
Certainly the original projections of 20 million doses being in the arms of people by the end of 2020 was ambitious. And, it's fine to set ambitious and lofty goals. I think what we found out in the process was that it was a little more complicated than we thought. And so that's not unexpected to see that hiccup. But I am concerned about these projections that it would take 10 years at the current rate to vaccinate this many people. But, of course, when you start something up, it tends to be a little slower. I feel very hopeful that the pace of this will start to pick up. But as it does pick up, it's going to become more logistically complex to determine who is eligible for vaccination.
One of the interesting things that we've been talking about a lot here, Mercedes, is the possibility that if you don't get the vaccine, maybe your name is going to go on a list. I think Spain is doing that if you refuse it. If you do get the vaccine, maybe you get on a plane or go in a restaurant, you get special privileges. Are they talking about that in the U.S. as well?
There have been a lot of discussions about whether or not you can compel individuals in the U.S. to become vaccinated. Now, there are always going to be exceptions, but my understanding is that employers can require vaccination as a term of employment. Schools can do that, but they do have to allow for exceptions. But I think where this will become an interesting debate, but not a theoretical one because it has such real implications, is that what if employees in a workplace refuse to vaccinate and then they become sick at work? Whose responsibility is it going to be to pay for that sickness if they allow those individuals? And what if their illness puts the clients or the patrons of that business at risk? I think the simple example of school systems. Will school teachers and administrators be required to vaccinate? Since, as you know right now, these vaccines are not approved for children, yet we do know that in the U.S., 2 million children have contracted COVID-19.
Well, it's just a reminder that we still need more testing, and that testing continues. But I do wonder, Mercedes, that this speaks to, we supposedly had months that we were working on logistics for the distribution of a vaccine. We knew it was coming. Operation Warp Speed was full speed ahead, if you will. I do wonder that if things aren't going as quickly as they are right now, and I understand you give the vaccine, you've got to wait 15 minutes or 30 minutes to make sure that there's no reaction for an individual, but do we need to see some kind of, like, we're at war against this virus, that we need to see some kind of plan, program, more coordinated coming from the federal government to make sure that we can get this out much more quickly? Because my understanding is from the pharmaceutical companies that they've distributed millions of doses, and yet we haven't seen that necessarily show up in the actual vaccination numbers.
No, that's a really good point. And Operation Warp Speed accomplished its goal of generating effective vaccines in record time. They talked about how to get them out to the states in the United States, but they didn't do any work on setting up the infrastructure to be able to deliver those vaccines. So it's sort of like getting almost to the finish line and stopping to wave and take credit without actually seeing it through. There are a lot of details around getting the vaccine into the arms of individuals. And right now we're in the easy phase because we're just vaccinating healthcare providers and individuals in long-term care facilities. We know where those people are. We can verify who they are and what they do. What's going to happen when it's time to vaccinate in a variety of tiers other essential workers?
Right.
I mean, I work as a professor in a university. Will I be eligible? I don't teach students face-to-face, so where would I be on the priority list? So all of these are really complicated things that, you know, somebody actually has to sit down and think through.
Hey, listen, we've got to run, Mercedes. I mean, the virus is just one of those subjects we could go on and on. Mercedes Carnathon, she is vice chair at the Department of Preventive Medicine at Northwestern Feinberg School of Medicine. I mean, Matt, listen, this is one of the things that everybody was worried about, that when we ultimately got the vaccine, you know, we had to think about manufacturing all of that and getting all the supplies needed to do it. But then it was a case of getting it out, especially, as you said, here's a vaccine that needs to be refrigerated at extremely, at least the Pfizer one, at extremely cold temperatures, and it's tricky.
Yeah, well, and that, and the fact that, you know, here in Berlin, we've been having these protests every few weeks with a number of anti-vaxxers who think that, like, Bill Gates and George Soros are conspiring to take over the world with 5G technology.
Yeah, wow.
I imagine back in the U.S., you have an even bigger share of those people who are going to be reluctant to accept the shot.
All right, we shall see. All right, coming up, everyone, Louis Alexander Namor, U.S. chief economist. We're going to talk about the economy, the expectations. Will we see growth in 2021? This is Bloomberg.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
You are listening and watching to Bloomberg Surveillance. On this Wednesday, it is December 29th, just a few days left in this year. It'll be a year of many of us, obviously. Very happy to wrap up. Carol Massar along with Matthew Miller, and quick check on the markets for you. We're setting up for a higher open, building on some of the gains that we've seen, certainly this week once again, and certainly this year. 37.33, the last print on those S&P 500 futures, just up 1/3 of 1%. Euro at $1.22, 10-year note, 0.93, so that yield just moving down a hair, but unchanged there. New York crude, we will get some numbers on New York supplies, or U.S. supplies, I should say. Stockpiles expected to come down a little bit, so that's providing a little bit of support there for New York crude. Matt, at $48.25 a barrel.
You know,
Yes.
I keep hearing people say
You look very pensive.
they can't wait for this year to end, but
yes,
I don't think that a heck of a lot is going to change that much right
No.
away. I mean, you don't even get a new president until later. As you said, the vaccine rollout isn't going very quickly or efficiently right now.
No.
Bars and restaurants are still going to be closed here in Berlin, is all I know, and it's difficult.
All I can say is that we're not going to be going backwards, and we are going to be going forwards. And I can start to think about the improvements we will see later this year. You are absolutely right. Just because we change a page in the calendar doesn't mean it's going to be different. I think January, February are still going to be difficult months. But I do think we're going to see improvements, hopefully, fingers crossed, in terms of the vaccine getting out there. And I do hope that we'll start to see businesses opening up. It is dramatic here in New York how many businesses have been shut down. A city, as you know, Matt, another city that you love, there's been so much, usually so much activity at all times of the day. It is quiet, and there's just so many storefronts and, office buildings and things that are just boarded up. Looking forward to some changes when it comes to that in 2021.
Yeah, absolutely. Well, and fortunately, there haven't been quite as many bankruptcies as we may have seen. The question is that yet to come? Louis Alexander, Nomura's chief U.S. economist, joins us to talk a little bit about the economy now. And Lou, we want to know what you expect in 2021. There was a time in March, April, May, when I was thinking, wow, we're going to get hit with just an absolute waterfall, fire hose of bankruptcies. That didn't happen, fortunately, thanks to stimulus. Obviously, not everyone has fared very well during the crisis, but we haven't seen an absolute catastrophe yet. Are we going to see that in Q1, Q2 of next year?
Look, I think Q1 is going to be we're obviously dealing with significant resurgence of the virus.
Yeah, I don't think his microphone is working. You may have hit, Lou, your mute button. Let's try and figure that out for a second.
Sure.
Carol, remember Joe Stiglitz at the beginning of this year was warning that we could see this cascade of bankruptcies, and it made a lot of sense to me. Fortunately, government help here in Germany, there in the U.S., has stopped that from happening. I'm not saying that everybody's remained solvent, but you haven't seen a wave yet of bankruptcies that we were fearing in H1 and in the beginning of Q3.
No, listen, a lot of, certainly when it came to publicly held companies that were maybe having difficulties, whether it was the hospitality industry or you name it. I mean, a company like Carnival Cruise Lines, they were able to tap the debt market several times. There were a lot of companies in general that sold off assets. There were ways for them to tap multiple places when it came to accessing capital. The smaller businesses, they struggled a little bit more. But again, cheap money, thanks to the Fed and some of those government policies, did make it possible for a lot of companies to survive. And I agree with you. We'll see what happens in 2021, whether or not there's any overhang. But I, too, was surprised, Matt.
Let's get over to Lou now. I think we got him back up on the air. Lou, these fiscal policies and central banks were trying to provide a bridge from the beginning of the lockdown to, the end of the vaccination, to the herd immunization. Are we going to make it that far, or are we going to see a ton of bankruptcies in 2021?
Look, I think the first part of the year is going to be really tough. Clearly, we're having big business disruptions right now because of those recent resurgence. I do think this first part of the year is going to be very tough. But I think the amount of fiscal support that's been provided is significant, and that has been a significant offset. The other thing which I think is remarkable is just the degree to which people want to get back to normal. And you saw that in the second half of last year. I do think that means once we get a significant amount of the vaccines rolled out, that the prospects for the second half of the year look better. And so there's more confidence in what that second half of the year is going to look like. So I think the first part of the year is going to be very tough, but I think you're looking at a much better second half.
Well, it's interesting that you say that, because YouGov has a study out, a global survey out, and basically it says people around the world want governments to spend more to help economies survive, right? We continue to see that, to survive the pandemic, as they ponder a bleak outlook for their own finances in the coming year. And they talk about households cutting back spending on entertainment, clothing, and food next year, anticipating higher living costs and lower incomes. So I worry about what that might mean, Lewis, when it comes to what kind of growth we ultimately get, and what kind of economic situation we get here globally and in the United States.
So one of the things that's unique about this particular shock is it's very different for different groups. So obviously, if you work in those sectors that have been adversely affected, this is a tough environment for you. And I think those people are dealing with the waning of the fiscal support. And so we are going to deal with fiscal drag on that part of the economy that has been most directly affected. But there's a significant part of the economy that, frankly, is doing pretty well. The private savings rate over the last year has been remarkably high.
Right.
And that represents a kind of pent-up demand that once COVID-19 is no longer the threat that it is now, you're going to see a normalization of consumption, which I think is going to be a big boost to growth in the second half of the year. So it's very much a mixed story depending on who you are.
Yeah, and I feel like we're going to be data dependent and just kind of watching things as we go day to day. Lewis Alexander, thank you so much. Have a great new year. No more U.S. chief economist joining us here. We want to get to one of the most read stories on the Bloomberg. Lenan Nguyen wrote it. She's Bloomberg News finance reporter, and it has to do with Wall Street bonuses, Matt, which, as we know, that anytime you put bonus in a headline on the Bloomberg terminal, it's going to be among the most read stories. Lenan, good to have you here with us. What's interesting is this is going to be a pretty good year for Wall Street, and yet that doesn't necessarily translate into higher bonuses. What's up with that?
Hi, Carol. Yeah, that's right. And I think that the key part here is that Wall Street has done better than Main Street, but a lot of these banks have big Main Street divisions that also need to be propped up during this difficult period. So while the traders, really got a huge windfall for the banks, these are big businesses that have to kind of spread the load and share the wealth when times are good. In previous years, when the consumer divisions were doing better than trading, that's what happened, and the consumer division sort of propped up the traders, and so now what goes around comes around.
Well, what's going to happen then in terms of poaching, in terms of movement, Lenan? I mean, there's a lot of people out there. What if there's a trading desk that made $500 million, $1 billion, $2 billion in profit for the bank, and they're not properly rewarded? Are they going to be drawn somewhere else?
I think that's a real risk for the absolute superstars, Matt. So the ones who can command that type of, competitive salary negotiation and, basically get up from their desk and walk to any competitor will definitely be rewarded for their performance, or else they'll leave. But for a lot of other people across Wall Street, it's been a pretty difficult time. It's not a great time to try and look for a new job in any industry. And obviously, Wall Street trading desks have been cut consistently over the last few years. So, this kind of competitive advantage only really applies to the best and most top performers.
Who will be rewarded most richly, and who is going to see no bonus or even reductions?
So what we've seen and heard from early indications is that Goldman Sachs and JP Morgan are going to be among the most generous. The bonus pool at those banks is probably going to go up about 20%, and that compares to more than 40% jump in trading revenue. On the other side of that, there's Citigroup and Bank of America. B of A is probably going to have a flat bonus pool, and Citi will have a flat pool for equities and, up to 10% for their fixed income traders. So it's looking like the fixed income traders will probably come out better in this, but it's going to vary a lot across the street and even within firms.
All right, Linan, thanks so much for joining us. Obviously, one of the most read stories. This is our bread and butter. This is what people want to hear about. Linan Nguyen talking to us about the bonus pool for 2020. Carol?
Well, what's interesting too, Matt, and she digs into her story, part of it is too that banks, the big Wall Street banks right now, they're rewarding shareholders. They're doing some big buybacks. So that's going on. And I think that there's also a little bit of a sensitivity. We've seen this after the financial crisis about, not throwing big parties and not doing certain things. And I think in a year where we've seen a lot of inequalities, inequities, we've seen the division between Wall Street and Main Street, that I think, the last thing maybe some of the big banks want to have out there is all of those headlines about some of the big bonuses going out. But, we got to remember, we've done these stories before, too, that big bonuses mean, it kind of trickles into the economy in terms of big purchases, especially for those high-end retailers.
Yeah, you're definitely right. I think, even if you've done well at JP Morgan, say, Jamie Dimon doesn't want you to go back to your house in Greenwich, back to your house in Bronxville, and be, showing everybody your new Ferrari when your neighbor owns a restaurant and the guy next door to that has a chain of gyms, and they've gotten hit so hard this year, they want to keep it low key. So even those people who have really outperformed are probably going to get a promise in addition to a bonus that wasn't as rich as they expected, that they're going to be rewarded more and more in the coming years. And maybe that's a good thing.
Yeah, I guess so. But what's really fascinating, too, is, this is a big year for Wall Street. And I think, as you pointed out, listen, the one thing those Wall Street firms don't want to happen is some of their big traders, their big money winners, to go to another firm. So I'm sure that those that have been really bringing in and really outperforming, I'm assuming that they're going to get a pretty decent bonus that they'll be taken care of, don't you think?
They'll be doing okay. There won't be a problem with food on the table.
They'll be doing okay.
Especially for fixed income traders. Coming up, Barry Ritholtz, Bloomberg opinion columnist. He'll probably want to weigh in on this as well as a couple of other things. Ritholtz Wealth Management founder as well. Is he giving big bonuses this year? We'll ask him. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Senate Majority Leader Mitch McConnell has made it unlikely that there will be a quick action on an increase in direct stimulus payments. McConnell says the Senate will consider boosting payments to $2,000, but that will only take place in conjunction with other demands from President Trump, such as re-examining special protections for tech companies. The U.S. is vaccinating an average of only 200,000 people a day against the coronavirus. Data show that while Operation Warp Speed has distributed millions of doses, some states have been slow to get them into people's arms. According to a Bloomberg News analysis, the U.S. almost certainly won't hit the Trump administration's goal of 20 million vaccinations by year-end. Secretary of State Mike Pompeo is reportedly deciding whether to designate Cuba as a state sponsor of terrorism. That's according to the New York Times, and the move would be a thank you to Cuban Americans in Florida who turned out for President Trump in the election. It would also make it tougher for the Biden administration to improve relations with Cuba. And in Germany, the daily death toll has surpassed 1,000 for the first time since the pandemic started. There were more than 1,100 deaths there in the 24 hours through this morning. Germany joined its European Union partners in starting vaccinations on Sunday. The U.S. Supreme Court is being asked once again to overturn election results. The Trump campaign wants justices to review Wisconsin's decision to count 50,000 absentee ballots, and it wants a decision before next Wednesday. That's when Congress meets to open and count the certificates of Electoral College results. More than 50 court challenges to the election have already been rejected. Global News, 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
market seems to be focused on everything but the fact that fundamentals in the economy appear to be losing momentum. Depending on the depth and duration of this second round resurgence and the subsequent policy measures that we put in place, we could see the first quarter dip back into negative territory, yet you see very little, if any, concern priced in via the equity market.
Lindsay Piegza there, chief economist at Stifel, talking about the strength of the underlying economy. Coming up on the Open, Margie Patel joins us, Wells Fargo Asset Management Senior Portfolio Manager. We'll get her take on what's going on for 2021. I'm going to change before the program into my blue suit. I do it as a tribute to John Farrow, my best bald friend, because he always wears a blue suit. So I'll get rid of this. He would be disgusted by this brown tweed jacket.
It's a very Matt Miller jacket. It's a
look.
very Matt Miller jacket. But you're right. Jonathan Farrow has a very distinct look. I'm glad to know that you have a best bald friend, and I'm assuming you have best non-bald friends as well, that you can break it down into categories. Maybe I'm your best blonde girlfriend. I mean, not girlfriend, but you know what I mean. And then there's best brunette friend. I don't want to get you into trouble or anything.
I don't get that specific. More broadly, I think very highly of you, Carol.
Okay. Well, back at you. So what do you have coming up in the next hour? Anything interesting? Oh, you said Margie. Okay, yeah. So.
Well, you know what, Margie Patel, I have to say, I miss John, obviously, because we're such great friends. I miss Tom. I miss Tom when we talk to Margie Patel, because I love to watch his interviews with her. So I will do my best impression of Tom Keene. But, the Open is a very fast-paced program, and I hope that the market provides us with some fast-paced action in New York on Wall Street, because Europe has been pretty slow today.
Yeah, I wouldn't hold your breath on that. I think it's going to be a little quiet. Let's see what Barry Ritholtz has to say. He always has something interesting to say. He's Bloomberg. He's got his podcast is very popular, I should say, and you should check it out. Masters of Business. He's Masters of Business anchor at Bloomberg Radio, Bloomberg Opinion columnist, Ritholtz Wealth Management founder. He has so many titles that we're done. We have no time to talk to him. Just kidding, Barry. Good to have you here. So what's of interest for you as we get ready to wind up 2020? As Matt reminded me, not much is going to change at the beginning of 2021, but I don't know, as an investor, kind of where's your head at?
So I'm still. I was listening to the clips earlier before you introed me, and I'm still amazed that people are confused that somehow the stock market and the economy are closely related. I thought that old myth was put to rest a long time ago. Your local economy is not reflected. The local restaurants that are closing, the small businesses, they are not reflected in the big market indices.
Why isn't it? Why hasn't that played catch up? That just kind of blows my mind.
So the big indexes are effectively market cap weighted, which is why it's Apple and Amazon and Microsoft and companies like that. The local dry cleaner that goes out of business, my favorite Italian place, Osteria Liana, just closed. They're not reflected in the actual indexes. In fact, even if you look at what we think of as day-to-day experiential parts of the economy, the gas stations and hotels and retail stores and travel, they're single-digit fractions of the index, whereas technology is 20-30% of, depending on which index you're looking at. So, gas stations, it's a rounding error. You could take the 50 worst performing sectors, industry groups, and eliminate them from the S&P 500, and it would only knock 6% off of the index. So it shows you that your day-to-day experience is so different than the actual indexes.
Yeah, I'm glad you hearkened back to the financial crisis. I was reminded, Carol sent me a story today on the Bloomberg about human-run hedge funds trouncing the quants, and I immediately thought of Ritholtz and, Josh Brown and Sal Arnuk and Joe Saluzzi. And, people picking stocks are actually doing better than these mathematical models. What do you think about it seems like the tech should have caught up and overcome by now, but they still just can't do it.
Yeah, I'm not going to make any friends with this answer, but even blind squirrels find a nut occasionally. All the data continues to come out, and it continues to say, over long periods of time, stock pickers, they do pretty well in selecting stocks, but they're terrible at figuring out when to hold and when to sell stocks. And that's where the advantages of index show up. It's not so much the cost, although that's a giant factor, and it's not so much their stock picking prowess, it's everything else going forward. The beauty of indexes are they self-correct, they self-regulate. Companies that do really poorly fall out. Companies that do well get put in. Personally, I think they were late to the party with Tesla. They should have done that much earlier. It was pretty clear what was going on there.
Right.
But that said, it's very challenging. And you know the people who are outstanding portfolio managers and stock pickers because, you know, they become household names mostly because they're outliers.
Barry, one thing I want to ask you, though, we have been in such a low-rate environment for such a long time, at the same time that we've really seen the explosion in indexed assets. And I do wonder, we had guests on today that talked about the 10-year moving up a little bit, maybe 1.5 to 2. I do wonder, as rates, if they indeed ultimately kind of go back to more normal levels or start to tick higher, how does that maybe impact the trade? Does it then, at that point, active management become something that is important and that the algorithms can't track as much? I don't know. How do you see it?
So you're raising like 3 really fascinating points within that. The first point is that go back to the .com implosion or the 08-09 great financial crisis, and in neither of those cases did active management distinguish itself. So the fact that we kind of came through sort of a crash and recovery year, hey, third time's a charm. They finally did better this time. Number one. Number two, the fears that indexing is going to eat the world, and I've heard that a million times, hold aside the fact that most of the world is managed actively.
Right.
And indexes dominate ETFs, but they don't dominate bonds or real estate, and they certainly don't dominate how most equity is managed. But the fascinating thing is, as more and more people index, because it's set and forget and it's cheap and it's low cost and it's easy.
Right.
It creates the space for really good active managers to thrive. In fact, the more people index, the greater the inefficiencies are going to be overlooked by the indexers. So that creates alpha opportunities. And then the third and most fascinating
Hurry
thing.
up. You got 10 seconds.
The third thing is it really is a problem over time. You could do well 1 year, 3 year, 5 year, but the persistency hasn't been there.
I know. We never have enough time for you either. Barry, thank you so much. Check him out, though, on Bloomberg Radio, Masters of Business, and check out his columns on the Bloomberg. Barry Ritholtz. Coming up next, we've got Dan Ives from Redbush Securities. You'll check him out on Bloomberg Television. As we go to a break, just about a half an hour away from that open, we've got futures suggesting some gains on this Wednesday. I'm Carol Massar for Matt Miller, and this is Bloomberg.
our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
A sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Good morning for our viewers worldwide. I'm Matt Miller, in for my good friend Jonathan Farrow. The countdown to the open starts right now. We begin with the big issue, another stalemate unfolding over increased fiscal aid. Senate Majority Leader Mitch McConnell blocking and burying an attempt to increase payments to Americans to $2,000 despite pressure from his president. Trump tweeting, quote, "Unless Republicans have a death wish, and it is also the right thing to do, they must approve the $2,000 payments ASAP. $600 is not enough," all caps. Senate Minority Leader Chuck Schumer also pointing the finger at McConnell.
A vast majority of the public, Republican and Democrat, strongly support $2,000 checks. An overwhelming bipartisan majority in the House supports 2,000 checks. Senate Democrats strongly support $2,000 checks. There's one question left today. Do Senate Republicans join with the rest of America in supporting $2,000 checks?
For more, let's bring in Bloomberg's Kevin Cirilli and Abigail Doolittle. Kevin, we'll start with you in Washington, D.C., because it's the issue really of the week. Are $2,000 checks even a possibility anymore, or do we have to wait until the next administration comes into office?
The window is narrowly closing, but based upon my reporting, I would note there in that tweet that President Trump tweeted out about support for $2,000 stimulus checks, he also lumped it in with repealing and replacing Section 230 of the Communications Decency Act. Now, Senate Majority Leader Mitch McConnell could have a situation where he could put forth a piece of legislation on the Senate floor that lumps together the $2,000 stimulus checks with something incredibly polarizing, which is Section 230. That would set up a vote for many Republican senators in a very narrow window of time to have to make a tough vote. So I bring that up because should there be Section 230 it lumped in with the $2,000 stimulus check, as one Republican lawmaker put it to me yesterday, that could be a significant poison pill, as it's known here in Washington, D.C. speak, for that to sink the chances of the legislation. Either way, that would be likely the only path forward between now and the end of this weekend before a new Congress is sworn in. That makes it increasingly difficult for the $2,000 stimulus check to get through in this Congress. But no doubt the incoming Biden administration is looking at the Republicans who have already now come out and voted for in the House and are expressing support for in the Senate, like Senator Josh Hawley, and saying maybe they'll be able to get those senators and House members on board from the Republican Party in a new Congress with a President-elect Biden is sworn in.
All right, Kevin, thanks very much. Kevin Cirilli there in Washington, D.C. We'll be checking back with him because the political action doesn't stop into the end of 2020. Let's get the market action, though, right now. 27 minutes to go until the opening bell rings. Abigail Doolittle, what have you got?
You know, we're looking at a modestly risk-on tone this morning, Matt. This, of course, after yesterday, we had a bit of a bearish reversal. We had the major averages at all-time records yesterday morning and then closing down a bit and perhaps on disappointment around that stimulus being blocked. But today, small gains for the S&P 500, the NASDAQ 100, this year's defense outperforming. So that points to a little bit of uncertainty. We are seeing a recovery right now, at least for the Russell 2000. I say Russell 2000 right now because over the last few days, this index has opened higher and then closed down. Yesterday, relatively dramatically, a real bearish reversal there. The worst 3 days since the end of October. Lots of folks talking about the Russell 2000 small cap as the real froth here at the end of the year. It's going to be interesting to see whether or not it can hold on to its pre-market gains as the day goes on. And from a cross-asset standpoint, Matt, again, modestly risk on. We have bonds just about flat. We have the VIX down ever so slightly. The dollar, worth noting, down for a second day in a row. In fact, its worst 2 days in about a month. That's helping out the pound. And of course, we have Boris Johnson going to Parliament today, trying to push through his Brexit trade deal in a day. That's a look, Matt. Again, modestly risk on.
When you look at, Abigail, when you look at the market drivers, and I go through your note every day, and you list the most important action of the session. Do you think that the stimulus is a bigger market driver than the vaccine issues right now? Because I noticed there was a little bit of movement this morning when AstraZeneca's vaccine was approved by the UK, but then the market turned right back down. I think disappointment here in Europe that Americans aren't getting those $2,000 checks.
You know, Matt, this may be a little bit jaded. While all of those headlines are important, I think that it goes back to what we were talking about yesterday, the idea that the Fed liquidity is there and you have these bullish tailwinds overall. Right now, we're in a time period that is the official Santa Claus rally. Right now, over that time period, the S&P 500 up 1%. So I think that that's the bigger driver, whereas those headlines, when they come out, they can cause little whipsaws. I think that the vaccine, though, clearly is a big driver looking forward for the hope, the optimism that it will allow the economy to reopen. Right now here into the end of the year, very light volumes, and I think that you have traders really just hoping that they can kind of lock in this monumental year during the pandemic, a surprise to everybody.
Yeah, Apple stock up 84% year to date. The company now worth $2.3 trillion. Abigail Doolittle, thanks very much. Check back in with you later as this market gets closer to the bell. UBS's Stuart Kaiser saying stimulus developments are eliminating another element of uncertainty, writing, quote, policy and growth uncertainties continue keeping market risk pricing elevated and stable amid clear progress in key risk areas. Stuart joins us now, and where do you see, Stu, the current stimulus situation? It looks like McConnell has shot down those $2,000 checks. But of course, if the Dems win in these Georgia runoffs, with Biden coming into office, we could see not only more stimulus, but just more government spending.
Yeah, good morning. Yeah, I think it's a great point. They've actually managed to turn a $900 billion stimulus deal into the bad news aspect of this by kind of, flying this balloon of $2,000 payments. Our view is essentially that both the vaccine and the stimulus have probably been on net positive surprises over the course of the last month or so. And I think that's largely why you've seen the markets, behave how they have. The vaccine's getting rolled out, maybe not as quick as you would hope, but the efficacy numbers are incredibly high. And I think the size and timing of the stimulus deal was certainly a surprise to our U.S. economists. So I think good news across the board there. Unfortunately, what you're seeing from a risk perspective is that has not been fully digested. The VIX still remains around 23. And if you look at longer dated implied volatility, those remain exceptionally high. So there is a little bit of a disconnect in our view in terms of, the real progress we've made on the vaccine and the stimulus versus how the market is pricing it. I think for investors, the good news is if there's still a lot of risk premium out there in the options market, that does suggest another leg of potential upside as these dominoes kind of continue to fall. You mentioned Georgia. Georgia, I think, is a key risk out there. The options markets are pricing about a 2% move. I think that's probably a little bit overpriced. The stimulus was a key outcome that you were hoping to get from the Georgia runoff, and that's sort of been announced. I do think that the Georgia runoff will probably be less of a catalyst for the markets than is currently priced. But clearly, key dynamic, especially for McConnell. What is his motivation to push through a deal if a week from now, either he's going to have reinforce his control, or it's going to be out of his hands. So what you might be seeing here is him sort of, playing a little bit of a delay tactic until that result is known.
You say implied volatility has been slow to normalize despite the stimulus bill, more Brexit clarity, and the vaccine rollout. I think the last one is a key issue that many people aren't sure about. How is that rollout going? Is it going to improve? Because we had a story on the Bloomberg today that said a lot of the biggest U.S. states, including the all-important Ohio, have only been able to deploy 15 to 20% of what they've got.
Yeah, we've had this conversation with clients quite a bit, is when you look at where volatility is priced, it seems exceptionally high historically. But then clients will come back and say, yes, but, you get a headline about, maybe Pfizer not being able to produce as many vaccines as they've committed to. And then you get a headline out of the UK about potential mutation. And then you get a headline yesterday about the vaccine rollout is going, slower than expected. So I think even though the base case has probably improved quite a bit, clients are still viewing it as there's a relatively wide range of potential outcomes around that base case. And that's why you're seeing the volatility remain high. This is, I hate to use the word unprecedented because it's been used so much, but we've never been in a situation where the markets are sort of held hostage by the introduction, efficacy, and rollout of a vaccine. And if you look back to 2020, if you're a volatility trader, the VIX went from below 14 to above 80 in 20 trading days. So, this is a once bitten, twice shy issue as well, where if we don't completely understand what this catalyst is, when it might occur, and what the magnitude is, the market, I think, is quite content to just leave some risk premium in the system until they know for sure. So I think as those dominoes fall and as the outcome becomes more clear, what that does is it provides a nice tailwind to the market as we get through, the first quarter and second quarter of next year.
I think you make a very good point, Stuart, in that the word unprecedented is probably the most used word of 2020, certainly in news headlines, or at least the first couple of graphs. Stuart Kaiser, thanks for joining us from UBS there. He's the head of derivatives research. Bloomberg's Kriti Gupta joins us now with a look at the stocks that are moving in the pre-market this morning. Kriti, what have you got?
Well, good morning, Matt. Let's just look at Tesla here, getting some heavy volume as well as some love from analysts Wedbush and Credit Suisse coming out and saying that 2020 delivery target they have of 500,000 vehicles is a real possibility, citing strength in China and a latest push in Europe as well. Bonus tweet from Elon Musk himself saying that Tesla cars delivered in the final 3 days of the year will get 3 months of the self-driving option for free. And I should say investors really liking that. Switching over to vaccine makers, we know AstraZeneca was approved in the UK today, the first nation to do so, ordering 100 million doses. And of course, yesterday its peers were selling off. Today, rallying together, CureVac, Moderna, Inovio, all up. Flip up the boards and you will actually hit a very important story this week. Alibaba shares seeing its best two-day rally since July. Once again, another day of gains for this ADR. Of course, on the news earlier this week that Jack Ma's company Ant has been looking to turn into a holding company, limiting some of its gains, but appeasing Chinese authorities. And Matt, just to wrap it up, a fun fact for you, in the last 2 months, as this company has taken a hit, Jack Ma himself has lost $11 billion of worth.
He's not going to go hungry, though.